Hey, well, my gut was wrong. So, in the grand scheme of things, it's pretty much what we thought was going to happen after that head and shoulder way up here. The target for that head and shoulder was 427, and that's where we hit. And then yesterday we had a apparent diamond bottom. I mean, it looked good until really the very, very end of the day. I mean, it looked fine. And I know that this particular action was probably signpost. I'm looking back at it. I'm like, okay, was that the up thrust right here? It's so small. Maybe it was. And then we never really recovered again. We never got back over like 490, 495. So, the entire action here was just very like subdued all day yesterday. And I don't know, in the grand scheme of things, does it matter that much? Maybe not. We may be back up to 0% by open. So if you happen to be in like a position where you were like hoping for a run and it didn't happen, hopefully it's going to flatten out here. And then I'll be honest with you, I think we're probably just going to camp today. I don't really see any reason to expect anything else right now. We'll see. Yesterday I put out a video. All right, no, I didn't put a video. I put out a chart and I said that I wasn't really happy with the RSI, and I didn't explain that. But if you go back and you look at like the 6 minute, you can see the pretty massive, obvious like divergence here. I talk about divergence on RSI a lot because usually it's very like if it's very on the nose and you're like not sure about something, it's typically a pretty good sign that it's not good. So when I looked at the chart yesterday, I saw that move and I thought, well, that's the same measure. It's the same measured move I think that we had expected for the outward move. So I think that was it, right? And then you can see here, this is kind of a mirroring still. And if we were to say it were to continue to mirror, we might expect something like this, which would be incredibly awesome. But I don't really look at the chart as, oh, it's going to mirror this or that. That would be like a move all the way up to $5 or $6. And I don't typically use like mirroring very much, like unless it's really obvious. So yesterday when I was doing the diamond chart, I used this as a breakout, and we talked about, I think from here, if it broke to the upside, it would maybe be a target around 580. And I don't have the line anymore. It's not this line, even though this does look like a hit on the creek. You can see it took off and then came all the way back down. So there's your cat ear. And I think downward breakout would have suggested like 412. But that 427, yes, there's a previous support way back over here from Monday. It's not way back, but That's not where I got that number from, though. I got it from the head and shoulder breakdown. So if you're wondering, like, why did I have that line there? Why was I talking about 427 before this? That's basically where I was coming from. It wasn't like anything super fancy. So at this point, I'm just going to ditch and I know what you're thinking. If you're looking at this, you're probably thinking, well, maybe that's just this move and it just happened like down low. And yeah, probably, but it's in reverse. So you can see like the breakdown is pretty darn similar to these two moves. It's like a rotation, basically. It's an interesting, let's call it like an interesting study, like case study, where maybe in the event of a reversal, maybe there's some kind of reversal of these prices in a way that generates this kind of upside down motion. And what I would mean to say by that is, like, this is completely heady. This has nothing to do with anything right now. I'm just saying, like, it's possible that we thought this was like a mirror out of this guy, but maybe this is like a rotation of this guy. And that's what we're seeing here. It's some kind of a strange rotational anomaly, and that's why those targets might match so well. I'm not sure. I wouldn't have measured it that way, so I'm not taking credit for anything. I'm just saying that there's a possibility, I guess, that that's a thing. I don't know. I've never really observed that, so maybe not till just now. But those values are definitely like pretty equal. Another way to look at it would be more simple, which is just like, maybe it's just a channel. Y'all are like, yeah, duh. I know, but I like to sort of connect things that may help me see something in the future that I didn't see before. And, I think when you look at these values, they're not even one-to-one, but they're pretty close. So is this a S-curve? Is it a shallow S-curve? I got to tell you, man, I'm not really positive it's a shallow S-curve, because at this point, it is very wide, and I think that's a positive. But when I zoom out and look at this on the big picture, it just reminds me of like what I normally expect to see on that second cat ear. And we've kind of talked about it at length at different times. But it's a good time to recap because the market's not open right now, so bear with me. Like, we talk about those distributions, and what you usually see is an exhaustion of the range during the distribution cycle, where you end up with a very, very obvious kind of repetition of pattern here, where you're going to get the entire sequence like in the latter half of the sequence, and it keeps going. This ends up being this kind of strange anomaly that we see all the time on AMC in like the cat ears. And so what I suspect is, and this is a very common error on my part, I wouldn't say error, it's something I think about, but it's also like easy to miss. And what I suspect is that that's kind of what we're seeing right here. So my suggestion is that that's almost exactly what we saw. Like, we probably were thinking right yesterday. I kept saying, like, when I zoom out, I sort of just see a big cat ear. That is a flat area. You can kind of tell right here. And yeah, we're going to keep some of these trajectories on today. I'm probably going to delete a couple of these. They're sort of superfluous at this time. Like, we don't need them all. You can tell there's a rejection there, so I'm not going to keep it. That way we have a little bit more room to see things. So what I'm thinking is that breakdown was probably just like the first sign. Yesterday when it came up and it recovered, it gave me like a glimmer of hope. And again, we've kind of talked about this before, but like that's the breakdown on these things. There's always like this kind of moment of truth type deal, and you get to the end of the cat ear. And I was kind of squawking about that all day yesterday. There wasn't much else to talk about in the price action, but you get this kind of moment of truth at the very end. And usually if you get the breakdown and it hooks, it's kind of over, right? Like that's the end of it. That's kind of where the buck stops here, right? Like there's no more price action to really talk about because it's probably just distributing. This is like an LSPY. I call it the hook because it looks like a hook. Sometimes it presents itself as kind of like a final upthrust in this sequence, and that's where I started calling it like a four top at different times because you often get that fourth push that can represent kind of a final upthrust. But then later I was like, I don't know, that's kind of sloppy. There's all kinds of stuff I could say about that. But what I saw yesterday here, because I was looking at this as if this was it. So I'm going to show you where I made the mistake, right? So I was looking here at this like, oh, that's the end. I wasn't thinking about this as a possible larger iteration. So I thought this was it. And so normally if you get this push down and then it recovers, that's a sign that you're actually going to continue upward. And there really wasn't anything to say about it last night beyond what I said. There's not really any rule that says like it has to go, but it did break, it didn't break the trend, which probably was something I should have looked at because that's usually what you expect to see. But I thought it had broken here, so I was like, well, if it broke back here and jumped the creek, maybe it's fine. And that obviously was wrong. So what I should have been looking for is the bigger trend and how it hadn't actually broken here. So it had pinned itself underneath. And that should have been that should have been a signal that we weren't actually in this breakdown. We were rather in a probably in like one of these latter, let's call it iterations. So this is my learning opportunity just as much as it is yours. So if you want to take this and learn, you can, or you can just be pissed off. I mean, it's up to you. So I think what we experienced was probably this move, and it looked like a breakdown because it came low, and then it actually came back up again. So again, like my error here is that I thought that was the end. I thought that was the end of this cat here. So when I saw it come back up yesterday, my thought was, oh, it came back above, like this example where it comes high. But that's not actually true because, again, like I wasn't looking at just like the major trend here. And again, if I had done that, I think I would have seen that it didn't actually break. And the RSI was just kind of one of those things. I said I didn't really like the RSI here. It was hard to tell because it's extended hours and volume's been weird in extended hours. I don't know what to trust. But it definitely made a divergence. Like it didn't look right. It looked unhealthy. So then you see like you can see them quite very clearly here. The 1, 2, 3, 4 push-ups at the very end. So that just tells you like everything you need to know right there. At least it tells me everything I need to know. Like I was too early. That's all there is to it. Like I was wrong. It was too early. It did not make the move it needed to make to get out of this push. So at this point, you're not here anymore. You're really down here. I mean, there's no sugarcoating it. So am I bearish or bullish today? I'm kind of neutral today. I think we're probably going to just sit at 450, to be honest. And I think everybody's sort of expecting the same thing. It would be a good opportunity for a bear or a bull operator to really screw over bears or bulls by pushing it one way or another. That would set up next week fairly well. If there is a desire to do that, we might see something crazy, but we can't control the price. And by looking at max pain at 450 and where we're opening right now at like 450, it kind of makes me think with the volume being sucked out of this that we're probably just going to coast into the weekend. So I'll recap this later if we like kind of double viewership or something and people want an explanation. But I hope this helps you understand like the dangers, I guess, of like fractal analysis, because especially with fractals being iterative, meaning you can see smaller versions of the same things. it's really easy to think that you're in an ending sequence, and really you haven't done it yet. Like, this is part of a larger sequence. And again, it might be a little confusing if you've never like sat around and like charted this particular structure, but at this point I've done it so many times, like I totally get why I made the mistake. And it's a scaling thing. It's like, it's hard to tell. You just have to look at scale, and I just didn't. Yesterday I definitely was like thinking this was it, that this was the final top. And in the grand scheme of things, it may not matter that much anyways, because yesterday's price action was down and it just stayed down. So like in the grand scheme of things, when you look at what happened yesterday with that downward move in the flat area here, we're going to open probably pretty close to where we closed here. So it's not even like all the analysis yesterday. It sucks if you were feeling bullish and then you got into something and you can't, now you're maybe not expecting it to move today. But really, like, we're just kind of stagnant. So at the end of the day, my hope is that it didn't screw you guys over too bad, because you're still kind of just flat. This is bear sign. Scat. It's boop. It's poop. It's poop. I would say that TA has been pretty good in this run. It's been pretty easy to follow. The only time that hasn't been easy to follow, I think, was yesterday. I mean, the day before, the only thing that really bugged me about the day before was that support above. Okay, I'll take that back. The last 2 days, but that's really common for me. Like, if I don't see a range form that's kind of obvious, I find it to be very difficult to trade. So that's why a lot of times, like, if I don't see a really clear and obvious range setup, I won't even bother trading it, because I'm like, it's not worth it to me. This first day here and this second structure here were fairly predictable. I did think we would get a head and shoulder. I didn't think it would break down, but you could see it happen. And again, it's like, as much as that kind of sucks, like they brought it back to the gap, on Wednesday before dropping it. And so there was an opportunity to kind of exit. But the head and shoulder target was 427, and that's where we hit after hours here. So this is, in a lot of ways, that's completed, and that's good. This is like the completion of this target. It's finished. Now the S-curve targets, those are low. I know Stockfather was talking about it. Other people have been talking about going low. I don't see us going below 276 right now, because if we did that, I think we've actually broken down. There's 3 creeks down here. One is, again, I'm just doing it as the crow flies and based on where I think this S-curve is. And we can talk about this wedge and how it's probably not a wedge, and it probably never really was. I mean, it's there, but it's not likely going to provide what we were hoping for, which was that big push. And those targets for those wedge breakouts were pretty high. We could have gone up back into near 8 to 10. But it's probably just an S-curve formation. It's either shallow or it's not, right? So we could do a target setup for a shallow S-curve today. I think that would be good, because it's probably going to be flat. So we'll want to do a shallow S-curve, and then we're going to want to do a full S-curve. And I've already kind of done that. But we'll do those 2 targets today. And those are probably going to be the best TA targets that you're going to get for now. A shallow S-curve is all that's left here, like for a possible bull move. So I don't think there's any kind of other move here for any kind of a diamond. I think that one broke down. So that's pretty simple. I think that's the downward move. It's the full height of the diamond. So it broke down, and it did it from that center liquidity. Like, ultimately, you can see it right there. I mean, you can see where it's hanging. That's the diamond move, and then it broke down from there. There's been a couple times on some stocks. AMC did it once. I've only seen it do it once, where you get a double move, where you get the upward move, and then you go back, or you get like the downward move and then you go back up and get the upward move. But that's pretty unusual. And that might be part of those, that might be a part of this. So we'll talk about it, because it does look to me like this S curve has a bit of a, let's call it like a structure. I don't know. I was going to say trellis, but then that doesn't really, some people don't know what I'm talking about. They've never heard that word. Trellis is like what holds the vines. It's like it's a built-in structure. It does seem like it has one, and it could be that the reason that that target is where it is we might get a big pump today to like 570 or something before a drop. It doesn't seem out of the realm of possibility to me that that could happen. And then we could end up dropping back down. It could just be a big up thrust or something, drop back down and find support at 450. That's not out of the realm of possibility here. But in a shallow S curve, that would look like a breakout move or an attempt to break out, followed by a retracement that comes back down to near the creek. And yeah, and I think the last known creek, this one's kind of steep. It's not actually the most important creek here. This one probably is. So I know I'm being kind of down on the day, but it's mostly because this was a pretty definitive move, and you could see it push up as high as like 570 today and still come back down and end the day at like 450. And that would be the shallow S curve kind of reactive move or whatever. We'll get to that. We got time. You know, my expectation is if it did something like that, it'd probably be early in the morning. And I don't think we were going to, and then just bleed out the rest of the day. I don't think we would see that like very end of the day. It's just too much to happen in too little time. But let me see if there's any gaps that make sense of that move. Yeah, there's still a gap up to here. It didn't fill. So that looks like it closed at 548. So it could be there's still a gap filling there. And this one hasn't filled either. It got really close. I said it filled, but I was mistaken. It did not. And that is 688. And it never came up that high. It only came up to 660, huh? 688. I'm going to mark these gap levels real quick. Let me change their color. Right. So if you're looking for a more formal explanation, I just did it earlier. Some people are just coming in now. Basically, when you have we'll call it a cat ear. We were talking about it a lot yesterday. It looks like that distribution cycle. A lot of times you think that you're in a finishing move, and that's what I thought yesterday is we dropped. And I said it looked okay. I thought we dropped and came back above that trend here. That's what I thought happened. This is kind of what I thought happened right here. But in reality, we were probably just in a final iteration. We really only moved up enough to kind of get to that last one. And you can see it very clearly on the extended hours now. Like there's a last 4, 1, 2, 3, 4. It's like right there. So, yeah. So we were waiting for... So what I'm trying to say, I guess, is if this is hard to understand, don't worry too much about it. But this motion right here, this little guy is the same as this whole sequence here. And so I wouldn't expect anything except for maybe a hook today. This is like a really extreme example that I just showed right here. This would be like if we were going to get and that's pretty much the target for the shallow S curve. It's usually like a recovery move that goes back up to the top. So it would go back up to like 580. That's how it starts anyways. And then after that, you would have potential for run back up. You'd have to find supports in the right places and creek supports and all that jazz. So we're not there yet. But that would be like a shallow S-curve situation here. More than likely, so that's kind of like a low percentage. Like if I'm thinking of lower probability, I'm just thinking like in terms of realistically, I would say this is like mid to low probability. And then I would say that what seems very likely to me is that this ends up being what we call like a hooking motion. So you have like 1, 2, 3, and then this would be like your fourth move here, which is essentially just like a breakdown move where you come back up. You probably only retest this lower trend at this point. You can see like the way it's drawn, it looks weird, but it'd be like that guy. If this is the cross, we always talk about that crossover, and that doesn't usually happen unless you're bullish. So there's going to be a pretty strong chance that we get stuck. Even if we did pump back up, that we get stuck at 492. So if you're looking for like the safest possible trade this morning, that's probably the safest place this morning. Is like roughly around 492. I don't think I would expect something much higher just on a Friday with max pain at 450. I think at that point, that's like an auto reaction type deal, and then you're just going to range out the rest of the day. And then worst case scenario is this is probably like so this is like a hook action. So I would say it's probably middle to high probability action. And then I would say like worst case scenario today is something more distributive, I guess, where maybe you pump and instead of holding, I don't really know how this could happen this way exactly, but it would have to be some kind of like double bottom on this guy that, I don't know, fails at 427. It's hard for me to imagine not ending the day at 450. So this doesn't seem super likely, but if I were going to hook and drop from here, it could actually happen quite rapidly. It would be like this, where essentially it could kind of dump by the end of the day. You'd have a breakdown. It would look like that curtain rod kind of business I always talk about, where you kind of like hover. Seems not likely that we would drop beneath like 4 or something like that. But that's something I would say is like probably low probability as well. Wouldn't expect it. None of these are even like 100% going to happen anyways. Like they're all kind of, I'd say low probability on this, because if this were to happen, I think at that point, this isn't even like I wouldn't even say it's a hook. This is just S-curve, really. It's continuation. So this is like your S-curve. This is one that has, again, the only reason I would think this is lower probability today is probably due to max pain. So, but maybe end the day at 4 instead of 450. And that kind of ensures that you're going to get a little bit more, perhaps a little more continuation to the downside on Monday. So if we sat here and hooked and ended the day at like 4, maybe Monday starts to look a lot more grim. Like you're going to head down towards those low targets. So it's not following a particularly steep pattern here. The more common low targets that I have were like 292 and stuff like that. And I found some others that they're all kind of grouped together. So what I said in the little post I did yesterday was it's like just basically targets are grouped around 3. I think that's probably the best way to look at it for now. And when we get down there, we can look at where it's at. Because I'm looking at interceptions when I made these, but we may not get there at that time. We could get there later. If we were to come down, it could be a little lower, like 321, if we got there a little later or something. So instead of 327. So it's probably a better idea just to think about it as if the S curve continues, you're looking at, you guys are like, no, not mid to low threes again. You're looking at kind of a grouping around 3. That's the same target Stockfather had. It's the same target I had earlier in the week when we were looking at this guy. So we've had that in mind for a few days. It's not like anything new. It's just there. There's people that are calling for like 1 or 150 or whatever. Everybody wants me to respond to every call out. I think there's a desire to see if I agree or disagree. And I don't think I necessarily need to dismantle anybody's opinion about it. If you have an opinion and it's good TA, then it's like probably a pretty valid opinion. If it's just an opinion because of emotion, then I'm like, well, there's no backup for that, so I'm not going to pay much heed to it. But people that do good TA, if they come up with good targets, then they're reasonable targets. Somebody, obviously, if they found a target that's way down here somewhere, and I found that one target pretty easily, which is like looking at the intersection of earnings and the macro creek. We've hit 3 of those in a row. It's basically been a trend for earnings of 1, 2, 3. So the fourth one would get you to like 190. Okay, it's super simple. I think that's a reasonable target based on a trend. But we did break out of that trend, in my opinion, with a 300% move. I don't know, that could be just an opinion. It's a fact. We broke out of that trend. So now you're going to watch and see if that target's ever going to be met. And I mentioned a couple times this week that eventually low targets are not going to be met. Like, they're just not. So you're going to have lower and lower and lower targets constantly. The same thing happened in the January, it really was that year 2020 year where the COVID drop happened. And then for AMC, it had lots of targets at the very end that it never got there. Like, it never checked every creek in the end. It just didn't. It checked a lot of the important ones, but the price action ultimately did not go as low as it could have gone based on TA. So, like, I understand that folks, when they look at those things, they're seeing those targets. I've gotten a lot of targets in the past that weren't hit immediately, and they were hit like much later. So there's that possibility as well. Like, maybe we do hit that target, but it's a year from now or something, So I never say never, because I think that's silly. But eventually you're going to get to a bottom, and it's not going to hit those low targets anymore. Someone's going to be wrong. And the same goes for the high targets. Like, we did the same thing in the June run-up. Everybody had higher targets at that time. Those targets didn't hit, So keep that in mind when people are talking about low targets. Like, it might hit. It's probably a good target. If it's good TA, you can log it. It might hit now. It might not hit for another 2 years. And in the case of like the low targets for AMC, they didn't hit for 3 years. I mean, from back in 2020. So it took a long time, Sometimes it's not really the best way to, like, I wouldn't be making those bets, I guess what I'm saying. I would be more realistic about just short term. If I'm looking at, all right, well, what am I doing here with the trade? If I want to get out of, we're having some trouble even finding a push-up here this morning. I do think we need to check these levels, but if we don't get that push-up early, we may not get it. So this is usually the highest volume of the day, first thing. So we'll see. If we don't get the push-up early, we may be in just a low grind today. This isn't much of a hook. I guess it's kind of like a trend trend hook here, if you want to look at it like that, like a wedge breakout. Sort of like a narrowing break to the downside. Could be like that. We could see it that way. So anywho, we'll see. I want to do a better shallow S-curve though. I want to do that probability. So yep, it's going to be a boring day, I think, for the most part. Kimchi, you're getting close to being on my list, so just relax a bit. I can't really tell what you're talking about, but kind of just throwing stuff out there. Rosalind, holding this stock is like a full adventure split. Yeah, it's been really crazy. Someone want to talk about the offering. Yeah, there was an offering for GME, and supposedly they released some results early, which doesn't make any sense because it's like way too early. I don't know if that's true or not. I saw someone mention it in the Discord. It might not be true. I have the offering pulled up. You guys don't think I'd read these things, but I do. So this is the offering for GameStop. What they're offering is up to 5 million shares of preferred stock. As of May 4th, there were 306 million shares, roughly, of our common stock outstanding. So they said our charter authorizes us to issue up to, what is this, like 1 trillion? I don't even know what that number is. Shares of Class A common stock and up to 5 million shares of preferred stock. I don't know with this offering. It's a little unclear what they're actually doing. I read through it. It just says that basically let me go back to the top real quick. Let's see if I can find that other number. So I took it as like 5 million, not 1 trillion or whatever. I think that's just like a maximum amount. By the way, I could totally drive to their offices. Isn't that funny? Like, this is not super, I don't want to like give my people like doxing me again, but there's like, it's not super far away from me. A few hours, but I mean, there's a lot of stuff here. We could go through like all of this. There's so many things. If you read the very beginning of it, it just basically said approximate date of commencement of proposed sale to the public. So this is them selling shares into the market. This is dated May 17th, 2024. This is not like yesterday's news. This isn't something from years ago. A lot of people post crap like that. You got to make sure that you read the dates. This is an SEC filing, and it just basically says we may offer or sell from time to time or any combination of the securities we describe in this prospectus, yada, yada, yada. And yeah, so they're basically just saying that they can offer a certain amount, but I'm not really seeing like an exact number at this time. And I could be wrong about that, but I was reading through it this morning and I don't know. Not really sure what the deal is. But 1 trillion, up to 1 trillion is a lot, and that doesn't really make sense to me. I don't think that's what they're trying to do. But those are the only numbers I could really find. There's a lot here, y'all. We could read this all day. We probably wouldn't get done. Our ability to this is goofy. Our ability to anticipate, identify, and react to trends in pop culture with regards to sales of our collectibles. I mean, there's a lot of stuff in here. This is the table of contents for different parts of this. There's just so much. So, bottom line is, I think this is like what they're saying they can do, and I don't really see anything else right now. I looked through this thing and maybe I just missed it, but I think this is 5. I think the 5 million is the number. So it comes up more than once. That 1 trillion doesn't really make sense to me. I don't know what this is about. I think it's like up to 1 trillion. Like that's like what their maximum amount, like over time. But I think 5 million shares right here is what they're saying is like basically they're going to start selling it back into the market. Well, offering it into the market, whatever you want to call it. Makes sense? Yeah. Okay. We can come back to this later if you want. So, of course, you know, after that was announced, this thing just dumps. We were talking about yesterday how this was a reversal signal unless you get an M9, and then we got an M9. So that obviously, you know, negates the signal. It's ugly, right? It's an ugly move in after hours trading for GameStop. Yeah. So it's very suspect, but at the same time, a lot of folks were anticipating AMC was going to do that. You know, that AMC was going to drop the stock. And we hit the first target, by the way, which is this bottom right here. We're at it right now. That was one of my earlier targets this week, was the 2018 floor. So we're there. We failed to get back over 31.11. You can see that in the after hours price action. This makes it more obvious, I think, when you're looking at like quote unquote cat ears, that this, if it was a shallow S curve, you can see what happens. That if it was a shallow S curve, this should have held. It shouldn't have just been like an up thrust. It should have held here and then gone back up. Instead, you got a distributive action. Pretty dangerous stuff, right? It looks almost like exactly the same, at least on RSI. I think in the price action, you would have had to just read this range and seen that it bled up above and then back below. And AMC did the same thing. It just had a weird, like, sort of a slow motion here that it looked like it was holding that support. I don't see that on GME, but that's what really threw me off yesterday. And then you can tell like that's a double up thrust above 498, I think, is what we were talking. It's like a 5. Basically, it's 5. So that $5 level is now going to be a pretty big sticking point for us. Going forward, I would say that that's more than likely going to come back in the future. The 483 and $5 is going to end up being like a really frustrating zone for us at some point. I wouldn't say frustrating. I would say like highly contested. Let's just say that. And I'm not just pulling that out of my butt. If you go back and you look at like big picture analysis on any kind of a breakdown for AMC, that becomes a high point of contention no matter what. So anytime you have an S curve, like here's one right here. I mean, I can really, I'll pull any example really you want, and I could probably find exactly that second ear and why that's been really important. So like this is one example right here. Here's the second ear breakdown. And then you can see why that obviously becomes like a sticking point for us going forward. It's highly contested. Here's another one. This one probably not as important on the second ear, but the first ear it seems more important. Same deal though. You end up with a lot of trading along that line. And then even back further, like depending on how you look at this, you know, you could say it's this guy down here or it's this guy up here, both of which are just a massive resistance. We touched that one in after hours way up here and never recovered from it. So those hooks and breakdowns end up being really significant as time goes on. This one historically was probably a really big one. You can see here, this obviously became really important. It's essentially delineating like the breakout zone later. And then it's where we hooked later before we drop. I mean, it defines so many things usually. So it's very important at this point that you understand like this kind of section between, I'm going to keep the 483 because it was this floor over here. But it's 483 between that and roughly 499 or 5. And that's going to be a heavy zone for us going forward if we don't get any kind of positive reaction or positive jump over those levels. It always ends up being long-term really significant. So we're going up, Booksy. Yep. It's good volume. We'll see what happens. Like the 427 target is pretty much the only target I had locally. I mean, $4 and $4.50, those are obvious ones because of Friday max pain. I don't feel like I don't need to say that out loud all the time, but I hope you all know that. Like during a Friday action, any kind of like even integer or even 50% or 50 cent interval is going to be probable. So that'd be like 4, 455, 550, or below us 4, 350, 3. They're not always going to end the day like institutional traders. That is, they're not always going to end the day at those, but more often than not, you're like right under it or right above it. So if you're not aware of that, that happens all the time. I think this is kind of like your gap fill move. So we're up 0.85% on the day. Very different looking than GameStop right now, you know, and of course there was no dilution announcement on AMC. GameStop, though, I would say this is positive. It hit the 2018 floor, and that's a positive sign in my book. I think that's a good thing for GameStop. I wouldn't be surprised if GameStop did have a pretty massive rally today, at least back up to perhaps this $27 level. I don't know what max pain is for GameStop, but I wouldn't be surprised if we came back up to this pocket up here, just as a reactive move. A lower reactive move may only take you to like 24. I don't have a lot of strong feelings about this move just yet, y'all. It hasn't done anything to make me think it's going to continue. So just all things in perspective. Yeah, and 5 is a, 5's going to be one of those numbers, I think, going forward that's going to be difficult. We'll see. Do I still think 530 is important? Yes, I do. I do think 530 is still really important. I think 530 and 550 up to that point is really important because of what it would signify here. So we're talking about a shallow S-curve, and we just did this on the macro. So if you guys are wondering, like, where else do you see this? We just did it. That's a big picture. So it's a good example, at least recently. And what you're really looking for is if you have a drop, are you coming up and forming like an accumulation? And on the macro, that's kind of what we did here is we went up and we formed like a slow burning accumulation. Like this is one thing that could happen today that I didn't even really talk about. This is really middle of the road, which is sort of like a like an early creek jump with like an accumulation form high. that's certainly a possibility for today as well, because I know I've got like 12 lines drawn. You guys are like, well, one of them might happen. Yeah, I know. This one is, I know people don't like that. They want me to just stick with one. But this one might be likely today as well. Something like this, because you do have the big macro picture, and this is kind of what happened on the macro pictures. You got a final like push back up after hitting a low, and that ended up being like your low that you hit, and then you come back up, and we found support, and then we kind of ripped back to the upside. And if it were to be one-to-one with the macro, it would probably look like this. You would just gap up and go all the way back to 580, right? And then come back down to like 5. So both of those are, actually I should label them the same. They're both shallow S-curve. It wouldn't matter which path you take. One just takes more time, and it builds an accumulation range. That's the only real difference. This one is just like a rip, but it doesn't stop. But so far, we just have a giant wick up to that trend. I call it a resistance, call it a creek. It's very evident that that's where it hit. That's why I put that line there this morning, because I wanted to see if it breached it. You know, people get on to me a little bit about my charts being messy, but I don't put a line on my chart unless I think it's relevant, and I'll take it off once it's not really relevant. If I feel like, it's not really relevant right now, I'll remove it. And then long term, I don't really care if there's lines that are down low. Like, who cares? We're not looking at those regularly. I think everything right here is relevant. I've got levels that are pretty relevant. There's a lot of them. Some of them are more relevant than others. And I mean, that might be one of the problems with my charts, is that I don't have a hierarchy of relevancy. So that could be annoying for some. I get it. I don't know how to fix that. I guess I could kind of like bold the ones that I think are more relevant. I'm probably going to try to mute some of these like possibility lines so that they're not cluttering the screen. That way you don't have like a whole lot of, are these all like semi-thick or something? Yeah, I guess they are. That way you don't have a lot of extra stuff there, and you could see the lines a little better. That's for your benefit and for my benefit. This target, this is like the double reversal target. It has more to do with this kind of a slingshot effect where you're pulling back and then you're rapidly firing up 50%. But it also happens to be the measure from back here. That's one of those weird like AMC market anomalies. I mean, it's really everything, where you get these build-outs that kind of present you with targets that you can use later. I was using this as a diamond target, specifically from Liquid Center, roughly around 489. So that's why I'm posturing these where they are, right above and below 489 as possible targets. It's kind of telling me that there's a swing that could happen right here in equal parts, I guess is what I'm trying to get across, just from this move. But the only way you can really identify that is to identify it as a kind of a diamond structure. Otherwise, I usually don't grab that. I wouldn't just grab some random upthrust from somewhere, you know what I mean? The diamond structure tends to be very predictive of future moves. Like, you just find it to be really predictive. Something about it, I guess the drop in, the upthrust in the middle, and then the exit, they all kind of coincide with each other. And then what happens next. But normally, like, I'm not taking measurements like this and trying to like plop them in different places, you know. I think normally that would be unwise. But in the case of like a diamond structure, it just tends to work itself out like that. I don't know why. It just does. So we got a big candle, and then it got eaten up, sold all the way back down to 450. And then we're running up again against the same wick that we just saw. I do see a lot less volume there, so we're going to have to see if all the selling has been absorbed. You're going to find out pretty fast, because if we hit this top on weaker volume and it doesn't just kind of push out immediately, it's probable that the buying is getting absorbed as opposed to selling getting absorbed. Does that make sense? The buying getting absorbed would indicate that your weakness, apparent weakness here on volume, is because there's less buyers pushing it. Selling being absorbed would indicate that the lesser volume is because selling is going down, but you should see it make gain. And if it doesn't do that, then this volume as an indicator should be telling us that it's weakening. There's lots of times on big run-ups, if you go back and you look at some of the candles, it's kind of fun to do a backwards analysis on candles. It's kind of interesting. There's a lot of these candles that when you go back and you look at these big green candles on these longer runs, there's sections where you have really tall wicks. And if you go and do some candle analysis, those kind of wicks can often look like a reversal signal. But in the event of, depending on what your time frame is, of course, if you're higher time frame, you can look at that as like, that's just a pullback. That's the way you should read the candle. It's like, oh, it pushed up and then it closed, lower, closer to where it opened. So you had an advancement and then it got eaten up. And then you can look at that in comparison to the volume, and you can then say, okay, well, what happened there? There was a lot of volume probably being pushed up, and then there obviously was a lot of volume on that pullback. And then you look at the next candle and you're like, well, it's still continuing up. We didn't really have any kind of downside there, so sellers didn't take it over. So it's not really a reversal candle, right, at that point. But all the same, like, it's advancing now on less volume. So somebody is being exhausted, and in the case of this present time, you're kind of wondering, is it sellers or is it buyers? And it looks like it might be sellers. It's trying to advance. And so within a few candles, you can usually see the end result of it. And of course, the other thing you can do is just switch to a lower time frame. A lot of the candle analysis, the best way to use it is like high time frames. You can use it on like the 1 minute, but I'm not a penny. I don't trade on the pennies. So for me, it seems kind of silly to do that. And then we were looking at that indicator yesterday, and I think I turned it off. But we were looking at that indicator yesterday, and it's built into that code. It's looking at candle analysis, and there's a lot of candle analysis indicators. One of them, it's called like an NR7, narrow range 7. It looks at what happens when the candles are shrinking up to 7 in a row or getting smaller and smaller. That usually indicates a turn in the market. The one we looked at yesterday was a indicator by this wizard guy. That's what he says. He said he was a pine wizard. Y'all are like, pine is the code. Yeah, I know, but it sounds cool. I think about it like nature wizard or something. That sounds a lot cooler to me, more like fantasy. And I don't know how that would relate to the market, but that's what it said. Anyways, he was a pine wizard, and he uses the candles, because he's talking about how it has to have closing values above X price or whatever for that certain thing. And of course, if you change these time frames, it's changing the indicator, because it's all based on the candle analysis essentially. So one of the dangers here is if you get a double top where this is like slightly higher on lower volume, that could be, again, a negative sign. Really, the only positive sign here for a bull would be, again, closing above, having a couple candles close above on this time frame. I'm on the 6 minute, so I'm just, again, relating it to the current time frame, would be for us to have like a few candles close above the top here at like 477. Right now, it sort of looks like you just advanced on weakness. And if sellers took that over, and if it were buyer exhaustion, then it's just going to dump. Like, it's going to reverse hard. So the only thing that I don't like about candle analysis is, well, there's two things. So like, one is you're trying to predict market movements, but a lot of times you need to have like multiple candles, and you still need to look for like a breakdown. So it's a good one for most things, as like a supplemental, I feel. I know there's people that that trade on candles. Like, they'll trade reversal candles on bottoms when you have like an engulfing candle, and then they'll wait for support, and then they'll buy in, things like that. Totally cool with that. I think it's a cool trading strategy. I've seen some people use that narrow range concept in bottoms, where you get like an inside candle, I think is what it's called. And then depending on what happens next, you can trade it. It's pretty neat. I'm not really fluent, I'll be honest. Like, I know some of the tricks, but it's mostly like back pocket kind of stuff. Like, oh yeah, this also means something kind of thing. I don't usually trade based on it. But if you're interested in that, look it up. There's a lot of really cool stuff on candle analysis. So Pine Wizard sounds itchy. So this is what I was trying to say is, like, I don't necessarily think a red candle is always bad. And mine are like kind of pinkish, but because of what happened right before, we know that it was going up on apparent weakness because the volume on that second candle was a lot lighter. And so when it gets to the next candle, you kind of have a lot to prove. You have to show strength on the buy side, and you're seeing more strength right here on the sell side, like knocking it down. It's not over till it's over, and that's the other thing I was going to say. There's like a couple things I don't really like about candle analysis. One is that it usually relies on multiple candles, not just one. There are some candles, like this is kind of a reversal candle. They call it like a hammer. That can often signal a reversal might be coming, or like a gravestone, which might signal you're about to turn down. They're legit signals oftentimes, but like in this case, you can see this looks like a gravestone and it ended up dumping, you know what I mean? You still have to wait. But the other thing I don't like is that if you're on a time frame, you always have to remember, like, that time frame has to be completed in order for that candle to be completed. I know I'm on a weird time frame. People don't know why I use 6 minute instead of 5 minute. It's because when I was doing RSI analysis, 6 minute was way more accurate for reversals. I don't know why. I did everything around 5 minutes. I did like 3, 4, 5, 6, 7, 8, 9. You know, I was like looking at all these time frames, and 6 minutes was just the best. So I gave you the highest percentage accuracy in terms of RSI reversal points. So I started using the 6 minute instead of 5 minute. Maybe it's just AMC, I don't know. But you have to wait for the candle to complete before you can really make a strong analysis. So if we were on like the 15 minute, this is going to look completely different. I'll go to the 10 minute. And you can see like, oh yeah, you know, it doesn't really look exactly the same. Now I've got a completely different set of candles that I'm looking at. Then it can be in your favor or against you, you know. It's good to kind of observe. That's what I was saying. I might see it more as like a supplementary thing, where I'm using it in combination with just like a trend breakout or something. But anyways, I'm going to stop talking about candles because like I said, I'm not like super fluent in it. I know some of the basic ones, and I know some of the things to sort of look for in relationship to volume. And that's kind of as far as my knowledge goes in the candle analysis. Maybe I should do more of that. I feel like I'd be more well-rounded as a trader. But this program over here we were looking at yesterday is based on candle analysis, essentially. And it's cool, you know. People find ways to trade like that. We're getting kind of pinched up into this corner, so we should either break or nosedive in a second, because I don't think we're going to be able to go anywhere else. If we pop here, we'll probably head up to 489. That's the next spot. That's the sticky point. That's where we have this little cliff happening right here. So if we get that move, it'll probably be rapid up to 487 or maybe a little lower, but it should go right up here. If not, probably going to come all the way back down to like 453. So I don't think we've checked this area thoroughly at all. So they kind of left the door open there. 6 minute because charting hipster. Dude, you're so funny. For real. It does sound like such a uppity way to like, I don't do 5 minute, I do 6 minute. 5 minutes so yesterday, dude. It's so mainstream. I really have a real mathematical reason though. I wouldn't have just picked it for no reason. All right, there you're getting that pop. So we're getting some upside today. You know, I'm not. We've already filled the gap, so I'm not like saying it can't be good here. My big thing today is I'm watching these levels that need to jump, and I'm expecting them to not jump. Why, Booksy? You don't think we can be hyper bullish on a Friday? Pretty much. It's just not very often that we're hyper bullish on a Friday. So it's not like out of the realm of possibility. You can see there's a big volume input here this morning. Most of the time on a Friday, most of the time, you're going to get high volume in the morning. The volume is going to be sucked dry by the end of the day. And then the last hour and a half after the options contracts kind of trade out, you might get an influx of volume at the very end of the day. It's not that unusual for most days anyways. That's kind of the way things go. But for us on AMC, it's pretty typical. So yeah. Makes sense. All right. So there we're at the little cliff here at like 487. So we made it back. So this is seller absorption. So now we can look at it very confidently. We were waiting to see really this break. So if I were trading just based on candles, I probably would have used this break right here at 475. We're heading on up. Sounds like a Muppet song. I'm using this as kind of like a creek line from this previous draw here. I'm going to check something really fast. So yesterday we saw a potential buy signal on AMC on the 4-hour, but GME obviously went the other way. Yeah, this also got an M9. It's starting to look like a shallow S-curve reversal to me. It's pumping all the way back up to the top. I said that 5, this area right above 5 rather, is going to be kind of a sticky point as well. It doesn't seem like we're stopping. Seems like we're getting that push. So I'm not changing anything here. I'm still sticking to my guns. I think we're going to see one of these situations. So this initial upthrust was an all 3. Okay. The reason I had these drawn a little lower is that you might expect these to kind of fail to advance. So right now we've advanced beyond the first couple of levels here. Again, not trying to be like negative or anything. I know people get pissed off with me. They think that I'm being really negative. I'm trying to be realistic. Just keep it real. I just don't think we're out yet, and I know we're high, but it's not just coming up to 497. Like 498 is the level we got shut down on multiple times here. So to me, this could still be like a giant hook. I mean, you can see it very clearly. I hope that's evident to everybody now. And we were talking about this morning that I want to see the EMA on this one. Hang on. Oh, it's low on this one. Well, where is it on the regular trading hours? Yeah, so we're sitting right underneath that, or right on that 4-hour. It's at 489. We already knew that. We talked about that a lot yesterday because the sideways trading around the 480s yesterday brought the 4-hour EMA on the regular trading hours. It brought it up to like that level. It was previously a little lower. It was down here. It looked like it was going to pitch down, and then it just kind of started getting pulled up because of all the sideways trading right here for the last few days. It brought that 4-hour up, so we're basically sitting on it now. We're at 6%. That's not a bad gain on the day. We'll see if we hold it. We're at 491. GME is at 2130. It's getting a little bounce, a little bit of life. Not seeing much to go off of here on GME. If GME can get back above 2167, I think we might see some something good. It kissed that floor really fast, and then it bounced. GME is also at this lower trend, and this is a pretty precise trend here. It's got a very solid like 3 hits on it, 1, 2, 3, and I think that's probably the low trend. We're sitting right on it right now. So it would be a good place for GME to find support. This is different than AMC. AMC's trend was, the only one I could find was much higher. And frankly, it looks like we're kind of hooking into it right now. So we stopped right there. Let me see if I can reduce some of this price action gobbledygook here. Since we already got that move, I'm going to bring in the I'm going to bring these guys up. Because really the only benefit of me keeping it on the screen right there is if I wanted to like showboat and say like, oh, see, I said it was going to go up and it went up. Whoop-de-doo. Nobody should be impressed with that, by the way. And that was kind of an... I feel like anybody trading this would have seen that up was very likely here to retest some levels, regardless if this is distributive or cumulative. So it doesn't matter what you believe about the range workout. It would have gone up either way. So more than likely, like high probability, we're going up first. All of the situations that I pinpointed today and said, here's what I think could happen today, every single one of them started with an upward move because they all would. So in that way, maybe that would have been a really easy trade, you know, if you were like feeling like you just wanted to day trade and you're like, yeah, I'm pretty much not seeing anything except up first. But I wanted to point out that like that's not something anyone should be like boasting about. I think this is actually lower. There's 2 of them. I drew one, drew the high one, and that's the one we hit here. So it's probably relevant, so I'm going to keep it up. I wonder if that's just this guy. Yeah. So, anywho. Anybody got any great plans for the weekend? I hope you do. Hope you're going to have fun. I know what my plan is. My plan is super simple. Pretty much nothing. But you are the Pine Wizard. After 5 break, going to 5:30. Well, I think 489. I know I kept saying 5, but I really think it's like 489. I had 2 markers, 483 and 489. And it's a weird number, but it seems to be a little bit more accurate. Remember yesterday, right here, this was like 494 or 495. Sometimes you're not going to get like that really even number. I don't know. You know, I couldn't tell you why stuff like that happens. It might be because of the bid and the ask. Like maybe people are like low balling like a round number or something. So instead of going to like 490, they're going to 489 to get their orders filled or something, thinking that it's going to be more likely as it approaches an even number. I don't really know. Maybe someone else knows why that happens sometimes. You would think that more people would be like, no, it's just 5. But it's probably like as you get closer to 5, more orders are hitting. Sometimes you just don't quite get there. This weekend I will sleep. Good. What's in Lynchburg, Tennessee? What's there? Cook Bacalo. Bacala? Bacalo? Sleep Token? Is that a band? I feel dumb. I don't know who that is. Jack Daniel's Distillery? That's cool. Lynchburg Lemonades. That's cool. Bourbon. It seems like a lot of people know that, I guess. Is that like the birthplace of bourbon or something? Or just known for that? That's cool. I didn't know that. I used to live not that far away from Tennessee. You'd think I would know. But I guess I didn't. I'll check them out. Sleep Token. I'll write it down. All right, so what we're looking for here on AMC is if we can find support on this creek. You see the one that came down from here? You're possibly kind of bullish. I mentioned that this could be a bizarre like channeling action into the end of the day where we kind of walk back down on this move, back down to 450. That wouldn't be bad if we were managed to stay above this guy. It could be a lot like what happened on the macro picture where you have like a push up. It doesn't necessarily break the creek, kind of pushes resistance, and then comes back and does a backup to a creek, and then it kind of chills out. As long as it's accumulative, that could be positive. We left behind a really low trend here. If you go back, I know I use the word creek a lot. It might frustrate some people because they're like, that's not a creek, Booksy. I know Wyckoff. Well, there's different levels, just like anything. So different time frames are going to have different supports and resistances. What I find is that a creek usually follows a trajectory that's established. So really like a creek is not a hard line. It's like a perceived support. So like right here, a creek would have like dragged down. It's a lot like an EMA. And you would have had this as like a support and resistance. So like, has this been checked? Maybe. We know there's a big candle wick right here that came back down. So like that would tell me that it could have been checked on like the 1 minute. And it looks like it was. So you see how like that should have been checked, and it was. But if you lose support on a higher creek, that's kind of like the next place you're going to go. So it's important to sort of keep in mind that if I lost support up here, where am I going to go? I'm probably going to go all the way back down to this creek. So if it were to lose support high, kind of right where it's at, or maybe a little bit lower, down to like 472, you're probably going to drop all the way back to 450, which again, max pain. Makes sense. So at this point, that's not really the creek anymore because you made a higher high here. Now you would like raise, they call it raising the creek. I mean, it makes sense. It's like flooding. The creek is raised to here. And that's where your support is right now. So the reason I use trends to define the creek is because oftentimes I find them to be set up in a way that it's already set up for you. Like, I didn't need to draw out the creek. I kind of already knew where it was going to be because you can see where the last resistances are. It's just kind of a simple way of understanding that concept without having to like kind of continue to redraw it. I can just keep these on the screen. And then creeks also flow in reverse. So these are downward facing creeks. So these, I would call these actually, I've like mixed it up before. They're really bearish creeks because they're downward. They're like resistance. But I could see why you might call them bullish creeks if you think about crossing them. That's like bullish. So they're just creeks. Doesn't really matter. They're downward facing creeks. These are upward facing creeks. So just like there are creeks to the downside, there's creeks to the upside. If you flip the chart, it's easy to see like, oh, look, we went and jumped the creek here. This was support, and now we're coming back down to test that creek, and we're kind of continually pushing it down. I would say like this is kind of where it was a minute ago, and now it's down here. And a minute ago we pushed it really low. So that's the action of like pressing through supports and resistances. So that's the reason why I use that word instead of just using trends or trajectories or channels all the time. Because in my mind, I'm thinking about support and resistance. Is it pushing? So we can look at this and objectively say, did this push the creek? Well, it pushed one of them. It pushed this one, which was a trend. This one just happens to also be like probably the more major downtrend, right? So did it push it? Yes. So right now, what you could say is like bulls pushed against resistance. They pressed the creek up to about 498, 497. And then when you drop here, now you're saying, all right, am I finding support? And that's another way to kind of look at it is like brackets. You can look at it as like support and resistance brackets. Those are always indicative of generally where you are on the creek anyways. So that would be like this little pocket. So an advancement would require us to now push up above here, you know. So if I saw the price come up, and you guys most of y'all already know this. Most of you are pretty seasoned at this point. But if you don't know this, that's why this kind of would indicate a breakout. So this is like a confirmation. So I wouldn't necessarily buy from this bottom unless I had a really strong volume profile that told me it's definitely a bottom, right? Like if I look at this and I'm like, yeah, it's not going back down. Or I could get really micro into minutia here. And if I saw the, and I'm not willing to say this yet because I don't think it's happened yet, but if I saw the price action was jumping a creek down here, and the volume was kind of drying up as it was doing that, and then I saw the buyers pick it up. So like they did jump a pretty steep creek here. So you can see there's like that M cross, but it hasn't happened yet here. Like this has not been pushed. So like nothing's even confirmed on like the small level yet that this could still advance. Does that make sense? I hope so. I hope it makes sense. I'm going to put this over to the side so it's not like in our face. I think we get the idea, right? So yeah, if this were to advance, you would see it jump micro creeks. So here's one, here's another, and then there's another one right here. It's just a resistance. Okay, and we can look at volume to help with those things. Like where are we seeing the most volume here? We're seeing them in these two sell-offs, but we're also seeing a lot of buying that's happening. Those sell-offs are really kind of like, I don't want to say they're bearish, but this starting to remind me a little bit of a possible bear scenario, which would be like you're absorbing low, and then you're going to go high again, and then you're going to break in like a cliffhanger motion. This is the kind of stuff you see on distributions where it seems like it might advance, and it might not even do that. We'll see. It seems like it might advance, and then it ends up doing what we call the cat ear, but it's really like a distributive action. So how do you avoid that, Booksy? It's pretty straightforward. This is where things get kind of simple. Like in the event that this is, if you can't tell because it's a 1 minute chart, and I really would have trouble telling anyways, except for maybe the volume. If you can't tell, then you just wait for this. Because if it's bullish, it's going to find support of the creek. It's not going to drop its creek. It's just not going to. And if it's bearish, it's probably going to drop the creek. you know? So we get an advancement here. It goes up to like 492, you know, okay, fine. Now what? Well, if it comes back down and it can't hold at like 485 or 484 and it starts sliding, now you're having to go all the way back to this creek, and you have to ask the question, does that make or break the range, right? At that point, if this came down. This hasn't happened, so I'm just kind of talking out of the side of my mouth here. Like, none of this has happened yet. But if it were to happen, like, I would be looking for these. So I'm like already anticipating a way a range might build out here. And you can see that right now we're like pressing down. So part of this is like defining the motion, like, are we even going to advance? This is probably a liquidity test. You can remember that we have like a really low line here. We've got a support here. So there's a couple different places this could stop, but it's breaking that little mini trend that we have. And I think that's intentional. It already kind of broke the steepest one, I think, here. Yeah, it seems like that's gone anyways. So it's kind of working its way out, right? And that's your fib band kind of stuff. It's working its way sideways. So I'm doing a micro range analysis because I don't particularly think this day is going to be super interesting unless we get an early break somehow above like 5. I think everything else today just feels like kind of down and sideways into 450. So this is kind of, for me, probably going to be the most exciting it's going to be today. That's just an opinion, I know, but unless we see that early break, I don't feel like we're going to advance. Volume usually dries out after an hour or so on Friday, and then the market maker wins, you know. So if the bulls or bears don't take it over and force some hedging. So if you're wondering, like, how do you do Wyckoff live? I think for me, it always starts with those waveforms and like where is support and resistance. Super simple. Now, if you're somebody like Stockfather who's been doing it for years and years and years and studied it, you're probably marking off places in this range as you go, and you're not trading it. You're probably just waiting to see the end result. That's usually what happens. Yes, 450 max pain. Pain. Clever, what's your prediction for the fight? Pain. That's why I made the joke in my title today, if you guys were wondering. Max pain. What do you think's going to happen today, Booksy? Pain. Look at your descending pennant. Your S-curve is invalidated. Well, you're not wrong that it could be invalidated. The larger S-curve is really steep, but I also drew it from this drop. I didn't draw it from the top. So I'm being kind of generous with this S-curve anyways. I know you guys are like, that's not generous. You're saying you're going to go $3. Yeah, but I'm drawing it from here. And really, like, that to me is probably where it is. But you also have to remember, like, I misread this range. I thought this was short. I thought this was the end. So really, this is where the S-curve would be here. So like I already mentioned that this morning. You may not have been here, and I'm not trying to argue or anything, but I'm just saying, like, I don't know if you were here and heard that. But yesterday I thought this was the end of that sequence because it looked like it was coming to the close here on that edge. And it turns out this was probably the end of it here. You can see the really clear flat top here. And there's the chance of a hook now as a result of that kind of price action. So I mentioned that this morning, like how I made that error and where that came from and why, frankly, that kind of happens sort of often because of the nature of fractals is iterations, and that's why I don't like them very much as a way of just proving something or trying to make ends meet as something. So I would say, like, this is probably more or less where it should have been. if this is the end of the cat ear. But none of that really matters if it's a shallow S-curve. Like a shallow S-curve isn't going to fulfill it anyways. So what this would suggest is basically like you would head low today, and then Monday would be kind of a sell down day. S-curves don't... I think at this point I need to just clean the chart again. I hate that, but I feel like I need to clean it. I'm going to leave my gaps. I'm going to get rid of... I feel like this one may end up being where the S-curve is, but I'm going to get rid of it anyways. So hold on, let me clean this up a bit. So S-curves are not, they're not always like, when you get to the end, they're not always really clear. What I do is I make a measurement, because they're a curve, and drawing curves in TradingView is a pain in the butt. I don't know if you've ever done it, but it's not easy. You can't, these aren't weighted tangents. So a weighted tangent would allow you to drag this out or down or whatever with little anchors, and you could change the angle of entry and exit. You can't do that in TradingView. You have to just do whatever they give you. So the only way to change the exit angle is to like push it farther over, which looks silly. So it looks like it then drops at the end. So it's more of a suggested flight path as opposed to being like really precise. When I think about curves, I don't think about them as like supports or resistances. I'd never, because there's too much error. But normally what you could do to help make it a little bit more solid is like from here, what I would do is I would say, where's the 50%? Well, if we're going to go down and test that creek, the 50% is probably where we already thought it was, which is right around 5. And that looks right to me. So like when I do that, I'm like, yeah, we've been kind of coasting right around this region, trying to reject under 5. And then you can see that the end result is that 270 level, which is just going back to that creek. So is it invalidated or is it just longer? It could just be longer. Like it could just be that because I was thinking we were finished, I brought this too soon, so it looked like it was going to drop, and so it looks like it went sideways. I think it's more likely that it's just longer than the way I drew it yesterday. And again, like I know that that's frustrating because you're like, well, why couldn't you get it right the first time? Well, I would have had to have predicted that this was going to end this way with this kind of like fake out move. There really wasn't another way for me, I don't think, to draw this trend. The way I did it made sense to me. You know, we said there might be like a lower hit, but I don't know where it would be. Like this would make the angle steeper if I brought these in. Maybe if I use this lower one. I don't know. It just didn't really like, yeah, none of these give you the right, that one's pretty close. Almost none of these give you the right angle though. I don't know. I don't feel like I could have made that much better. Yeah, that one's off. I don't even have to look at it. I mean, it's kind of interesting seeing how many points are hit or missed. This one's probably the closest. This one's off. This is the one I was using yesterday, and it was being used. I mean, it was clearly finding some kind of resistance here, and then it even came back above it and seemed to find resistance, and it hooked along it. So, you know, at this point, I'm kind of like, whatever. Probably this pushed it down, so it's more like a creek. We could use like the place it fell right here instead. That's another way to do it, is use like the drop off. Anyways, point being is that like if the cat ear wasn't drawn correctly yesterday, then the S-curve wasn't drawn correctly yesterday. So I still think like that 50% retracement is a possibility, and that sends you down to like 270 probably. So it's not really any different than what we were talking about before. It's just farther along. The only thing that's going to reverse, yeah, there's going to be a wall at 5 for sure. The only thing that's going to reverse this is a jump over this trend here. That's what I'm trying to say, y'all, is like there is no, when you get to that cat ear, like there's no benefit. I mean, that's why I misread it yesterday. I thought that might have been it. It came back up. It looked like it kind of reversed, but it ends up being just a distribution, a UTAD, and it came back below it. That was just using the higher trend here, and it failed, you know? So it's that simple. But there's no reversal on this pattern at all. And ultimately what this represents is a wave, right? So if you're waving like up and down, up and down, up and down, up and down, you've broken out, now you're going back up. If you fail and you can't regain this level here, you're just going to head back down. So, which seems like what we're doing. Yeah. So again, every move this morning was going to start with upside. That was a given. And then you're going to have to wait and see, and you can see right there. Oh, look, it broke the creek, you know what I mean? Like, it did actually reject along this outer one. It came back to the outside, tested it and rejected. We never even got an upthrust here. This ends up being like a little micro distribution. You can kind of see the paw on the second ear there. It's annoying, but that's what happened. So now it's going down probably to this guy. Yep. Here it is. So this is the waveform right here. This up, down, up, down. And so this is the reason why I use these trends instead of just stuff like this, which is helpful. I mean, clearly it looks like it mattered. I drew it there a few minutes ago and that's where it broke, but I really wasn't like expecting it to break right there. It's just that's where the floor was. But then this guy becomes very important. So once we reach here, then you get some kind of reversal. Do you see how this is structured? Like it's not difficult to see. I know I'm notorious for drawing too many lines and stuff, but in the end, like it's very straightforward. This is bearish because it doesn't make the advances it needs to make. It doesn't break this creek, which is like oppressive. It loses this creek, which is supportive, right? And ultimately, you're just stuck with kind of like a failed waveform here. And eventually, you're trapped in this pocket, and that's what really drives the price low. That's when sellers take over. And it's a supply and demand question. So if you were bullish here, and I know it's dangerous because of UTs, but if you were bullish here, then you should have come back above here. Like this is where the bull action would have happened, way up here. It's straightforward. So like I wouldn't have bought this bottom unless I was 100% sure about direction, because this kind of crap happens all the time in the market. And it happens at the end of this sequence. This is why Stockfather, he wants to like write a book about like cat ears or something. I'm like, well, we can do that, but this is why if he really want to, I'll do it. But this is why he really liked the analogy, because it's such an easy, once you understand it, it's like a really easy way to see breakdowns and breakouts as a range forms, as opposed to like marking out a whole range and trying to do the traditional Wyckoff method, which is applicable, absolutely, but would be challenging in these like micro ranges. You'd have to like really dig in. And a lot of people don't want to trade that way anyways. They don't want to have to sit there and map out every range. This was a simple way of understanding that. If this is bullish, it can come below for a spring, but then it has to go back up and find support here. And it can't just go up. That's not enough. It has to then find support, and it would advance. So you save yourself a lot of heartache. I mean, this is the short entry here on the rejection. We talked about the lower creek breaking right there. That's easy. And then the entry upon exit would have been like right here. And I know some people are like, well, dude, you can do that without all that crap. You could just label the top and bottom. Yes, you can. But there are times where this can give you a really easy way to observe the stock movement. Isn't that just like a breakdown and a hook? Yes. The terminology that I use is all pretty much the same for everything. It's just talking about the same things in different ways. And this is why I stopped doing traditional fractal analysis where you're just kind of looking at bars patterns, because this is really effective and you don't really need bars patterns. And then you're not guessing about the big picture. So if we're looking backwards, this does look like it could be an ascending accumulation if it can hold this creek right here. So I know I'm being, again, you guys are like, well, don't give me hope, Booksy. I don't want hope. All these downward ones look bad. Yeah, but there's one more thing here. It's like, this is why the analysis has to be progressive. You can't just like say one thing and be like, oh, that's it. That's the only thing that can happen. No. So this does look like it's going into like what I call like a beak, right? Where it went parabolic, the volume really increased and it pumped up high. It does this cat ear thing and breaks down, right? So it must be done, right, Booksy? No, actually there's a situation here that does happen sometimes, which is called an ascending accumulation. At this moment, I'm not going to say that's happening because I'm not sure yet, but it does happen. And there's a lot of examples of it on AMC. And what it is it's a buy up where you jump the creek, jump the creek, jump the creek, jump the creek. And you can see that that did happen. So I'm looking backwards and I'm like, yeah, it did it. Hopped it, found support, hopped it, found support, hopped it, found support. When it broke down, then you have to look at it and say, well, did it come back to the main creek you thought it would? And the answer was, yeah, that was this guy. Why did I think it was this guy? Because this is the middle of the formation. If we're talking about waveforms, we're talking about M crosses. So this is like your main M right here. You can see that pretty clearly. And so this would be like the center point of those. It's almost always in these sets of like 4, but you get like a high M and then a low and then another high M and then you get a low. And if the low on the second part is a spring, it won't break the creek. So this is where things get kind of interesting, because in the formation of a rising accumulation, this holding the creek is actually really positive. I would defer at this point back to March, but I know that I don't think we can get that on the screen here. So I'm going to see if I can get it on. I wonder if I ever labeled it. That would be smart. No, it would have been March of 2022. I feel like I would have labeled it, but maybe I didn't. I know, I thought I saved that one. All right, forget it. Well, March of 2022 has this same pattern, as do many of the bottoms on AMC. You can go back and look at the big January run-up. It has this pattern right before it takes off, and the March run-up has this pattern after a spring. There's a really important line. You guys are like, well, where is it? I don't remember. I'm trying to remember where it is. So usually what happens is this drops and forms kind of a trend, which just seems like that's what happened here. I want to say it's this line. I think that's the one. It's usually right there. I want to say it's that one. Yeah, so if it's going to run, it would go back up. It has to go pretty far, y'all. This can't be like a predictive thing. You have to wait, because it made the moves it needed to make right there, but it would have to jump a lot of things to go. So it's not there yet. Don't quote me saying Booksy said it was going to run and then it didn't run. No. But if it comes back above here, I think that's the line. I think this is the one. So what I did is I took a trend from these two bottoms and I put it over here, because in some ways it's like this is an early trend breakout and then it redistributes and it comes back down. So that's this redistribution right here. So it hit like a buying climax, didn't have the energy, but it did push resistance, and that's important, and that's what happens during the breakouts. If it's going to go, it would push resistance, but then it comes back into the trend and it drops. It finds support again without breaking the creek. It hasn't broken the creek yet, so that's important. So right here, you guys are like, what are you talking about, dude? There's a, you're going crazy. There's a creek here. This is the one it can't break. If it breaks this, there's no very little chance, if any, of a run. So I'm going to leave this on the screen for now, because there have been times where we've seen this pattern and it doesn't break, it just falls, or it doesn't hold, it just falls through. But if it holds here, if it jumps this local creek and then it advances back to the top and goes all the way up, yeah, that's the one. I believe you are the one. You mean the one to bring balance to the force? No, this isn't that kind of movie. I'm just deleting some redundant lines here. All right. What's the urgency, Booksy? There's no urgency. All right. So if this is an ascending accumulation, thus far it's been successful because you've had a buy up, pull back, buy up, pull back, buy up, pull back, buy up, pull back. None of those pulled back down beneath the creek. The parabolic motion here did push higher. So it did push resistance, and that's important. So it came above both this resistance here and then also this downward motion here. So that's significant. So in the event that this runs today, here's what I'm suggesting to you. It would have to be an ascending accumulation with a pullback that then runs. And again, you don't have to quote me on this. You don't have to trust me on this, rather. Go look at March 2022 spring, and another one is just the very first one, which is the January. Those both start with I think the volume's high enough here that you could make that case. So what I'm trying to do right now is help make that case. So if you're wondering, like, what am I talking about? It's this patterning. And that would be like we did indeed do a, you notice it's not light enough volume. Like, you could call it an LSPY or a bear flag, but the volume is like way off the charts. And normally in an LSPY, like something like this, volume is like dropping as it ascends. Yeah, so what I'm trying to do is remember, because I can't get that fractal. I looked up on my computer, I couldn't find it. I have it saved somewhere. I have that patterning saved somewhere because I know I've looked at it enough over the last couple of years. Every time we get one of these, I try to replicate it. Let me see here. I don't want to make you think it's going to definitely run here. It cannot break down. This kind of rounded creek I drew isn't quite right. It could come down here and make like a localized bottom. It just can't break through this creek. This thicker creek right here, okay? I need to hold this. I made it like a curve, but it really could be that this lower area. I know you guys are like, it's Max Payne Day, Booksy. It's not going to go. This stuff happens a lot in the market, and it happens a lot on AMC. So you have to be really careful about calling this out, because, and I try to be really careful about it, but this actually looks right to me. It's got the double M shape. It's got each of those jumping over. It's got the heavy volume sell here with a reactive move that's kind of light. The volume gets sucked out and then it buys back up. This is the bull chance right now. This is the main chance. So there would be a push here and then a push higher that could go more sideways. It need to recapture this trend. I want to say that's the most important one right here. I know it's a little strange because it doesn't look like it's necessarily like obeying the rules of trends, but see that's the place we broke down. And I think when you get a positive reaction on this, you get a buyback. I don't like that this is going up though. I wish this was kind of going down. Ugh, whatever. Beggars can't be choosers, right? My expectation with that, it would get kind of pinched up in here, and then it would float up and actually come back down this way. So what that does is a number of things. Obviously, it jumps back above this main creek. That's probably the most important thing. It also jumps above the downward creek. So this is a full-on cross. You know, we were just talking about it a minute ago because I did the little cross thing and I said it has to come up back above. That's what that is. I mean, it's jumping over the two main opposing creeks right here. So I'll make them both orange on the chart so you can see them a little more like together, like they're grouped together. That's what that would be. So in order for it to get up here, it has to do that. It obviously would grab that trend we just talked about right here. That's like the uptrend. It would have to grab that. That's a given. That's just jumping over again. So it's like advancing beyond the scope of a channel, and then it goes back to the bottom of the channel, and then it's basically a back test on this creek. So it's an SOS with a backup essentially locally. And then it pushes out. It's a local SOS with a backup. It's not a big one, okay? But this is how we usually see it play out if it's a spring action. And then, I don't know about then from there. I guess if we make that advancement, we would already be above 5 at that point. So you're also getting support on 5. So I don't know. This could end up going up quite a bit higher here. It may not check that line. It may just do this. You get a support on 5. And look, someone's going to look at this and say to me right away, they're going to say, man, this is a head and shoulder setup. Yeah, I think it is. When you look at this, you have to be realistic and say, well, that's all great, but that's predicated on it not breaking down in like a head and shoulder, and you're absolutely right. Because in a bearish, let's call it a execution of this, if it's a fake out, which they totally could do. I know you think that institutions or that charts aren't readable and I hear it every day. Someone says something like TA isn't useful or something on AMC. It's only not useful if you're not prepared for the possibility that somebody out there is trying to deceive you. So if they were trying to deceive retail here, this pattern I don't think is recognizable enough to most retail that they would see this as bullish. It would probably be to deceive other institutions and make them think that this is possibly going to run. And so they're getting all this buy-in. If it were a short operator who's trying to do this, they might just be pumping it up to see if they can get some people out, or get some buyers in rather before they try to reverse it and get a sell-off back down. And that would basically maybe exhaust your volume for the day. So yes, if you're wondering like, could this just be a head and shoulder setup? Yeah, it could be. But notice that it's pretty much exactly what you would expect if it is. Like if it did something like this, it wouldn't be out of left field. And ultimately, this isn't your buy-in point, right? Like, I hope I'm getting this across to folks that are trading live that might be wanting to trade. I can't give you financial advice. I can't tell you what to do, but I would never buy it down here. Just like I was saying, like I wouldn't buy it here or here. Like, I know it sounds weird, but I would be waiting till this. So again, it's kind of like, well, why don't you just say wait till it's above 5? Well, I do say that, but you have to then kind of go back and say, well, why? Because this setup is, so on high volume breakout here, if we get a high volume push up to this top and then a low volume pull back to 5, that's where I'm like, it's probably a good entry, because at this point, I think you've finished what I would call an ascending accumulation. And I think at that point, you're in really good shape to continue to advance. But as a TA or technical trader, you're still watching it, because you're still going to say, well, look, if this advances on weakness and sellers drive it down, you could be in for just a head and shoulder, right? And then we'd have to then go say, well, crap, that would just be like a failed attempt to break out. And then you've got a 21-cent drop after that, you know. So if it breaks this downward trend, you're going to go down to 432. So that's this guy back here. So it would be a retracement back down to this level, essentially, if it's a head and shoulder. Does that make sense? So, like, it's not over till it's over. It ain't over till the fat lady sings. I don't know why people call her fat lady. Must have been an opera performance thing. 450. Yes. Which is why my video title says pain. What's your prediction for the day? Pain. And I've been talking about here is like the probabilities, like in my mind, mid to low probability, that's sort of like middle of the road to lower probability is the push up today. So this already to me is like kind of my lower probability right now, but it's essentially doing kind of what I thought, which was this. So I've been erasing the lines as we go, but basically this morning I had us going up here. You can rewind if you want to check that, I guess. But this is kind of still my basic probability is that you end up somehow back down at like 450, you know. And essentially just like a coasting sideways action the rest of the day, range out. This is a lower probability in my mind because it's not typical for a Friday. But if you're going to really mess with shorts and you want to get the hedging going and you want to use the MM, this is what you would do. Vice versa, if you're a short operator going this way, down to like 4. I think the game plan today is either 4 or 5 if you're a short or long. I think your market maker doesn't really want anything except 450. So that's kind of a given. So yeah, these are radically different scenarios, but I do have like these as like lower probability options today. I think the more likely is that you're going to get kind of stuck, pinned. But you never know, man. This volume is very high for an opening on a Friday. It looks better than what we had yesterday. The pattern could be really bullish. It just depends. Yeah, so this would be only if you break out. I'm going to use a weird color here, something light, so you don't get distracted. I'm going to use that hook value right here. That up thrust, I think, is the key value for that trend. So we're not there yet. This could be just an LSPY. It looks really weak. I see the double M shape. We're going to have to wait and see how it works out. It's crossing the this creek, so you can see that. It's made an advancement here. I say it looks weak because volume is really low, and it's just kind of chopping like a bear flag would chop. So it's starting to present itself more like a head and shoulder from that point. We haven't broken down yet. Nothing really to say. I wouldn't be like, oh, that's it, it's over. It's just chopping. You need buyers to pick it up and just race up now. No more lollygagging. If you're going to go up, now's the time. This is your double M here. I think it's done. There could be one more. I guess it's possible there could be one more push with a drop. But essentially, like, it's jumped the creek already, so it's time to come back and test it. It's not advanced this time. You can see it got knocked down. Oof. Ugly. There it is. It got knocked down. So there's sellers just knocked it right back down there. So it got knocked down right here at 470. So the reason that didn't look great, and it's still not over, but the reason this particular move didn't look great is you can see it's like buying up shares, but it's doing it really weakly. And a head and shoulder has, let's call it like opposing volume profiles. So like what you look at is you look at rise on the head, fall on the head. You know, are you getting kind of equal parts? We sort of are equal parts here. Is selling picking up on that side? Yes. You look at the beginning and end. So you look at these two. So this is, again, opposing parts here. You look at that versus the sell-off. Arguably, it could be just this guy, maybe this guy. But either way, volume on the sell-off is not very strong on that first shoulder. And so then you have to look at the last one. This is a determination of whether it's a head and shoulder. And you look at volume here, and in this case, it's kind of a slow rise. And then here's where you have to do a comparison between the volumes. You would get rid of, you kind of can look at selling, but you would really look at buying. What is buying volume doing across this structure? It's dropping. So unfortunately, this is not looking great because you have a dropping buying structure here on each of these pushes. So volume's getting weaker. And then when you look at selling, you can do the same thing. You can say, well, what is selling doing? Selling is definitely, at least on the first two, is getting stronger. So for this one, it definitely increased quite a bit. And it looks like we're going to go back down and test that creek. Sellers are attempting to push it down now beneath that trend. We'll see what happens. What about the head and shoulder target? Well, you don't leave a head and shoulder until you break the neckline. And there are some times where you get a reversal, like after you breach a neckline, where it might come back up and find support. But our neckline is pretty straightforward right here. And it looks like it just popped through it. So, man, that's a bummer. And then there's the increase. So we were talking about this increase in volume and like how each of these steps increases. There it is. So they got the W there on that push. Damn. Excuse my French. Do you have TA workshops? Not really. I kind of just do, yeah, so that was just like a head fake here. And unfortunately, like hit where we thought it would and sort of stopped. At this point, because it broke the head and shoulder with such extreme volume, I'm inclined to think there's a strong enough weakness here. So I'm going to look back at this guy and I'm going to watch and see what happens. That this is like kind of the creek we were talking about, that we were like, oh, this can't break, you know. But it was very prejudiced, that breakdown. So unfortunately, like, that might be it, you know. And when we look at the setup here, you can see that volume on that head and shoulders kind of apparent. It looks ugly. Yeah, so we're going to go to low, I think. And that's it. And kind of nullifies most of the time that setup. The setup itself doesn't work if you can't find support on the creek. So, you know, I'm looking at this now and I'm like, it's kind of pressing against it. I'm on the 1 minute. Does that matter? Well, kind of. I mean, on the 1 minute chart, it might look really bad. I would probably wait like 5 or 10 minutes and just see what happens. But it doesn't look great, you know. So when I look at this on the 6 minute, it still looks like it's just kind of wicking below that support. Like sellers know, like they're very aware of what was happening there on this advance. And they knew that if buyers stepped in here, they'd take it up. I think sellers were also aware of the weakening buyer state, and that chop here didn't look great. And some folks are going to say, well, it's an A, B, C, D, you know, or whatever. It's a 1, 2, 3, 4, 5, or whatever you want to call it. And this is just an ABC correction. Maybe, you know, those are things that we can just go back to Elliott and start looking at other stuff as possible. It shouldn't surprise anybody, and it doesn't surprise me. I wasn't even looking at this earlier, but it doesn't surprise me that there's some common sense kind of retracements here, like those levels that we were at were pretty critical. So now we're beneath the 618 and we're beneath that creek. It's still like struggling, but it doesn't look good. So I would say that the low target that we got for the head and shoulder breakdown, I think it was this 432 mark, seems likely, which is coming all the way back to the 854 essentially. So if I were trading it and I saw that break here, and we did, I might be more of like a short entry as opposed to a long entry there. And then you could just play it as a stop loss. If you think it might, for some reason, reverse, you could just set a stop back up here near your entry. But, yeah, bummer, huh? So I think in the past, I probably wouldn't have anticipated that as a possibility. And I remember early on, and you guys don't care about this that much, but I care. I know I'm growing as a trader when I'm thinking about the other side. You know, when you're thinking about not just the upside, you know, you're thinking about the downside as well. And the possibility of like, that's where the rejection's probably going to happen. Crossed my mind pretty early, and that's a good sign. So I'm going to choose to be kind of positive towards myself about it, because I feel like a lot of times I beat myself up about it. If you see the negative before it happens and you come up with that target well before it happens, I think you're doing fine. I really do. What I don't think is healthy is to just say it's got to go, it's got to go, it's got to go, no matter what happens. That's not good TA. That's just hopium, you know. And there's a place for that, I guess, in the market, but not in the day-to-day trading. So it's not over yet. The day's not over yet. I mean, we don't know what's going to happen today. By the end, if we're sitting at 450, it could be a number of paths. I would say that I don't want this guy. So far, it's been more or less this has kind of been it. Like, I think this morning I drew one like this, and this is roughly still what I think is more likely. This is my mid to high probability today. This is the middle of the road approach. This has not happened. Could it still form an accumulation down here if this is like a new range? Yes. Technically, like if this has a big auto reaction, you could have like an accumulation form by the end of the day. But that's neither here nor there yet. We don't have any kind of way of gauging that per se. We'd have to see it happen. We'd have to see an auto reaction here that's strong. We'd have to see it find some kind of a clear pattern of accumulation throughout the day. Is it possible this is like a head fake Booksy? Well, it is, but only if this holds, you know, and it would have to hold like right now. And we've already seen it wick below this creek twice. So I'm not a big fan of like holding a level but not holding it, you know what I mean? Like where the level isn't really being held. A lot of times that makes me think that it's like going to just temporarily react back up. Like, oh, there's a weakness here, right? So we might get like a temporary reaction back up, and that gets people all excited or something, and then then it goes down again. And so it's just driving the price up to get more supply, load up again, and then drive the price down. So if it's like not holding your support and you're 100% sure like, hey, it should not be dropping beneath this level and it's pushing beneath it, there's clearly like a weakness on the part of someone. Same with the upside, like there was clearly a weakness on the part of some sellers up here. Now they came in late, they wanted that high price clearly. And sure, like buyers could come in late if they want a low price, but levels hold when they're really strong. So if they're not really strong, they don't hold very well. Yeah. So there we go. We're at that creek. We're waiting. We're sitting on it. I don't know if you guys can see it. I made it purple for some reason. I'll make it lighter so you can see it a little better. I'm on the 6 minute now. I got off the 1 minute. The head and shoulder is a lot more obvious here on the 6 minute. You can kind of see that. It actually looks like it's built out longer term. It almost looks like the head and shoulder here is like this top. Isn't that weird? And then this looks like this, the shoulder here. It's very strange. So you can see the turn down on the 6 minute. It's kind of struggling. Let's check some EMAs here. I don't have them on. I'm gonna turn on my 90 and 180. So you got to remember, like the 90 and 180 are my way of, it's another like hipster thing, right? It's like instead of doing 100 and 200, I do 90 and 180. Why? Well, when I first started trading, I traded the 4 hour mostly, and I used the 90 and 180 in combination with a VWAP. And that was kind of the way I learned how to trade. This was a long time ago. It's a good trading method. Eventually, like I started kind of piling onto my own errors. So I ended up like not trading it well in the end, but it's good enough methodology if you want to use it. But just like the 6 minute is like kind of slightly off, I've just found that the 90 and 180 tend to be a little bit better than the 100 and 200 in terms of like actual make and break. You don't have to do that. You can use whatever you want to use. That's just what I use. And I prefer them. So you can also remember that those like the 90 and 180, since if you're using let's say you're using 100 and 200, you can remember that that's also going to be like the double time. So if you would shift your time up twice, if you went from 1 hour to 2 hour, then your 90 and 180, they'll share one of those lines because it's double. Does that make sense? So anyways, so it gives you multiple time frames also at the same time. So this is still looking pretty bearish on the 6 minute. There's no indication aside from a little bit of compression here right before that big move. There's really no indication that there's a change here at all. Let's check like the 3 minute. So I'm going to again cut it in half. So again on the 3 minute, the 90 is now the 180. So it's blue. Yeah, this doesn't surprise me. I mean, the end of a cat ear sequence, as we call it, typically this compression, and we already knew this with the idea of heavy trading yesterday. We were talking about how that brought the 180 on the 4 hour up. It kind of brought it into this pinch point here. So my guess is that a lot of our EMAs were probably brought to like a head right here. And without even looking, I'm just going to kind of assume that. I know it's a weird thing to do, but I think that that's very likely. Again, it's just a matter of like, yesterday it looked good. You see the jump, it looks like it might advance. It's really close to where we saw the other trend line too that I had on that little, it was like a handout or something. It was very close to that. Just really, really tight right there. So that was an opportunity that was just lost. It needed to continue to advance here higher, and it failed. So there's just no buy-in here. No buy-in equals no desire to go higher on the part of bulls. And frankly, this kind of a bullish move right here looks like too little too late kind of thing. Like it was starting to try to rally and then just got shut down. It stinks. Can always turn back around, but for now, this is just like a high volume upthrust. At least for me, I think it just looks like a hook, which was my realistic probability today, was that we probably just see a big hook back to the creek. Whoop. And that's what's happened so far. I would love for it to turn back around, but it's going to have to come really high. It won't do anything unless it's up here. So if we want a good setup, we might aim for this kind of higher accumulation today. So that would be like a bounce where we trade pretty high in this range. And we don't actually get pinned beneath the previous floor at like 462. I think right now a lot of this is probably just pinning beneath the previous bottom. So I know I wasn't using that when I was doing the analysis a second ago, but that's kind of what we've achieved here, is like we didn't find support. And again, that doesn't really surprise me that was right at the same level we were looking at for that push or that drop. So it's like right there. It's all the same. Some of you might say like, well, what if I just want to use my supports and I don't want to do all this other crazy stuff? Okay, then you can do that and you can see it gives you the same result. I like to do the other stuff because it gives me a picture of that supply and demand battle that's going on that I think is really helpful for me as a trader. And then also because sometimes you're not really sure, sometimes you're coming in at an angle at a weird place. You're not really sure where the support is going to hold or drop. Usually it makes sense. So you can typically, if you have those levels built out, it's probably going to hit them, and it usually makes some sense. It's not sporadic like some people would lead you to believe. So then looking at the 15-minute, you can see that this is radically different. So on the 15-minute, we actually have a cross down here. So it went from being like really bullish to dropping here at 624. This is the cross down. So this would indicate that now you're in a bearish trend. And this happened after hours on that really low volume session we had on Thursday. Well, I would say Wednesday afternoon, Thursday morning. You can see that's where the breakdown happened. And then everything else there has been under like the push down. So everything there has just been like pressed down. We already knew that. No, we didn't. Yes, we did, because we already knew this was not advancing beyond this little creek. So for all intents and purposes, this is a great way to trade. I don't think there's anything wrong with that. Just using EMAs, for example, is a great way to trade. It's not different than just looking at a creek. Like it ultimately boils down to the same thing. You've got resistance. You need to break resistance. If you don't do it, you're not advancing. So this is oppressive. It's right above us. We did peek into it. I'm not even really wanting to look at 30-minute, but we'll look at it. 30-minute might be a little lower, yeah. So on the 30-minute, we had a cross to the bull side, and now we're on like a weird inversion where the 30-minute EMAs are showing strength, which is bizarre, right? But we're below them. So my guess is that if we were going to have like a breakdown Monday, you'd probably see that these pinch together and like invert or something at that moment. That's on the 30-minute. Working your way up to an hour, yeah, they're starting to get lower. That makes sense. So on the hourly, once again, we've got like kind of a bull flip here where you've got the higher EMA riding below, but still like we're punching through it. It's like these look like press downs into it, and we're pushing right now on that 1 hour 180. We're kind of sitting on it. It's at 448. So this one has a surprising number of hits on the 90, which of course was, we're going up and down here, which was the previous time frame right there. So that 30 minutes been really, really good. if you flip back over, there it is on the 30. That 30 minute's been a really strong indicator for a run. And notice right where we put this earlier today, proof's in the pudding, right? Notice right where we put this, what would that have achieved? It was right where the 30 minute was. That to me is not weird. Like, I'm so used to it now that it just like doesn't even like faze me anymore. I think originally when I started doing stuff like this and I started determining like how these things moved with these waveforms, I would get really like mind blown, like, whoa, man, that's so crazy. But like now I'm kind of like, whatever. Of course that's where it is, you know. Of course it just happened to be right at 5, right where, you know, we were anticipating this trajectory going. Of course it was. You know, that's like, why would anybody think otherwise? You know, some important cross is happening. Of course, the EMAs are going to be involved. It's all like mathematical, you know, it's all the same. So here we have on the 2 hour, 2 hours been another one that's really good. I think 30 minute and 2 hour have been really good for AMC as opposed to just the 1 hour. Because I used a 2 hour on a lot of these bottoms that we've had, and it's been pretty good. So this is starting to look like that curtain rod business where it goes flat and then it just drops. I want it to be a shallow S-curve, I really do, but I'm not seeing the follow-through action. We just don't have it. So it's starting to look more like that curtain rod drop that we experience sometimes. The good news, if you want to say there's good news here, the good news is that you do have some mild RSI divergence on the 2 hour here. So I know, forget the price action. It's not really that big of a deal right here. We know where it's at. Look at the RSI on the 2 hour. And you can see that it's almost reset. It's back down below 50. And we're like pretty high up. So if you want me to be a little bit more bullish about something, that could be a divergence. I think going backwards, yeah, this is like the trend. So I got to warn you though, and if it, you know, I know that we've been talking about drops all week as a possibility, but I got to warn you about this one. This is not, it's not divergent until it bounces. So I'm all about finding those patterns and saying like that could happen. But for RSI, you got to be mindful. Remember, it's not a leading indicator. It can sometimes give you a hint that something might happen, especially if there's like a change in direction before the price changes direction. But if there's no real change in direction, like this is still down. It's still pointing down. It hasn't like turned up and started rising while the price is falling. You got to be really careful. This is the kind of stuff that gets you into trouble because it might look like, oh, it's gonna rebound here. And you can say like, sure, that's possible. Yeah, it seems possible that could rebound there, right? This could be just some kind of giant M-shape SOS, right? Where this is going to come down and it's going to find like creek support here, you know? Sure. Like I don't think that's out of the question. But I would just urge you to be cautious because if you recall, y'all are like, here comes the but and however. If you recall on the all-time chart, okay, we've seen this same thing happen on the like the super macro. I mean, like the biggest picture you can probably find, maybe on the weekly or the daily. I want to say it would show up. Remember this? Remember this motion right here? So I'm really not looking much at the price, although you need to know that's of course where we dropped. You remember this motion? Yeah, this even looked divergent. It's like rising a little bit. Now the moving average is not, and that's important. It's kind of just flattening, but it looks like it's rising, and this is staying kind of flat and then starting to slowly rise at the end. So it's really important that you remember that this term that I'm saying is a goofy term. I call it like a curtain drop or something because it's this flattening of price action, and it flattens that RSI out along a trend. And then it usually drops that trend. You can't see it on the daily. It's like not visible at all. It usually drops that trend in like a pretty horrific moment if it's not steady. So this looks very similar. You've got kind of this big M, came back down to a low, right? It looks like it's going to be solid. And you're like, oh look, it's holding that trend. You know, it's going to reverse maybe, because clearly this is lower and this is higher, and it's, you know, blah 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 blah. So when I look at this kind of stuff, I always remember like there's a possibility that you get what I call like that curtain rod drop. It's just a really straightforward way of saying if that doesn't hold, if it goes flat, it doesn't mean much to me right now. I think it could easily be, and you can see it's right at that intersection too, and that's where you got to be careful. It's right where these typically like will intersect. You end up with a possible drop here, you know. So even if this were to chop for a couple days, it could still have a pretty massive drop. Now, maybe one of the good news kind of things with this, if you want to do good news, bad news, play that game. It seems like the trend, and I'm just going to use my brain, my eyeballs to just kind of average it out here. It seems like that top trend here is probably not the best one. Like this lower one seems a little more accurate, because you can see like the moving average on the RSI on this time frame, which is the 2 hour. It seems like these first two little hits here were actually better indications of maybe where we might bottom out later on RSI. So if you want to play the good news, bad news game, it kind of looks like, yeah, it kind of looks like this target. And this is where you're getting that 190. Remember, people were talking about 190. That's where the roughly around where that earnings is. I don't know if that's the actual date or what, but yeah, if you saw something similar, this could be like an example of one where you kind of chop here high in order to accumulate shorts. That talk about a long S curve, and then if that were to happen and then you drop, it would be like that, more like that curtain rod. I'm actually being a little more optimistic. I'm hoping that we drop sooner if we do drop. Like if we're going to drop, I'd much rather drop on an S curve than do something like this. This was horrible. Because what it was like hopium. It was like you're waiting and waiting and waiting, and then it just drops really far to catch up to a trend that it hasn't touched in a long time. And that's pretty much exactly what happened on the macro, is that we left a trend behind from like forever ago, you know, and it was like that S curve, right? And we walked away from it and went sideways, and then we just dumped right back down to it. So that would not be fun. And I know there'd be a lot of I told you so's, but in my opinion, it would just be a really crappy place to be, you know, not fun for anybody. So I'm hoping we don't see something like that. But I guess what I'm trying to say is like the motion here, it's not like a one size fits all. There's a shallow S curve. There's a regular S curve. You might think it's left the S curve behind and it's not going to mess with it. And then all of a sudden you get this drop all the way back down. They announce something over here like dilution, and then it just dumps all the way back down, you know. So keep that in mind. It's not a scare tactic. It's really not. I think people want to tune me out a lot because I'm talking about downside. But the thing is like, if you're okay with the downside, if you're okay with the possibility of downside, then you're just going to be happy when it runs. But if you're not okay with the possibility of downside, you're just setting yourself up for like disappointment if it doesn't run, you know? And if it doesn't run, you're okay with it. If you're okay with downside, you're like, okay, whatever. We knew this was a possibility. So it makes a lot more sense for me to talk about downside because I'm like, yeah, well, if you talk about downside and it goes down, then you're just emotionally prepared for it, and hopefully you've had a plan in mind. If you talk about downside and it goes up, then you're just like, well, great, we don't have to deal with that downside. But if you just talk about upside all the time and then it goes down, you tend to be really upset and disappointed, and you're not like emotionally prepared for it. It's not good, you know? So I know it might seem like I'm being a downer all the time. People come on stream and they expect me to like give them hope. And I'm like, well, look, I have moments. I promise you, I was bullish back here, right? If you weren't here, don't take my word for it. Just go back and watch some of the streams. I kept saying like, I'm really feeling bullish. I'm feeling bullish. I feel good about this. It looks different. It's blah, 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 blah. I think I tried like 30 different ways to kind of prove myself wrong. And I just kept finding that there was a bullish avenue that just seemed really open. So I'm not bearish for the sake of being bearish, okay? I'm really not. I'm not bearish because I don't want AMC to go up. I'm not bearish because this or that. I'm watching the chart. I'm a little bit, I temper my expectations because I'm a little bit over aware. I'm like hyper aware. And that might not be your thing. It might not be your cup of tea. If you don't like somebody who's like hyper aware of every situation and who has to talk about it, then I might not be your cup of tea. But I find it to be very comforting because then when stuff happens, I tend to react in a much better way, like a more proactive way. I tend to be a lot more like, okay, here's the plan. Here's what I'm going to do. Because this is something I thought about, and I don't have to like feel anxious if all of a sudden it doesn't go the way I thought it was going to go. That's me. They may not be you. That's how I feel. So on the 4-hour EMA, we're kind of hovering above it. I can't really see the wick, but I think we wick down a little bit here. So we haven't gotten there yet. We're not quite there yet. I'm going to go back to GME for just a second. It's really not doing anything very good. I'm not seeing any kind of reversal on the 1 hour to speak of. I see a little bit of an inside candle here. That narrowing of the range could indicate that you might have a big move up or down. That's about all I could say for now. RSI is oversold. That's a given. We had a massive drop. We have a big gap, obviously, from that drop. That's a given. To me, it looks like it fell out of whatever this trend was, and it rejected along it. So at this point, if we wanted to clean this chart up, we could. I still think this is probably a relevant target. It was like 1395, and it's a retest on the macro creek. I know it's very low, but for now, like it hit the 218 floor. There's a gap below all the way back down to 17. It wouldn't take much to send it back down. And yeah, and I think when I look at this big picture, it does look like a big fat up thrust with a cat ear. So we'll see, you know. Once, if and when the retracement's done, you should see a nice move out, back up at least to some degree. It should be a reactive move. This is not typically like the end all be all. I mentioned very briefly, that sometimes you set up like a big range, and if that range plays out, I had it drawn out a particular way. I'm going to leave that one. That one was really strong. And yeah, I guess I'll leave the rest of those. I'm going to leave this one. I'm not going to use this one for now. I talked about the range possibility. So this is a massive potential head and shoulder here. And if it is, and it finishes, it's going to go really low. Like the target for it was like $8 or something ridiculous. So it would be like a huge flush. But there's a situation that sometimes occurs where you get and it could even be like a longer head and shoulder. It could be really complex where like these things have to work out over here first before a drop. But there is sometimes a situation where you get like a master fractal build out. And I wasn't making it up, but I was not doing it with anything on the screen last time. So what I would do is look for what I would do is look for some of those signs. So what I usually do on this one is I go to this guy. I find this one to be the more reliable because typically as we've worked our way out, we're already broken out of some trend. This one tends to be fairly reliable, and it's an easy way to kind of set it up. You can see why I might do that here. There's a stark, strong similarity, right, between this top and this top. I don't think that's on accident. I think it's by design. That's why I use this as like the master fractal. I think this is your upthrust, and I think that the rest of this could still play out. So what I did during one of the streams, I know this is just as messy as on my charts, but what I did during one of the streams is I worked this out and tried to determine where it might go. And it would be going back towards that macro. It would have to be going back towards that macro trend. Ultimately, you see that downward motion. That's ultimately what you would expect. So I don't think the $20 mark is necessarily where it stops. I think you could easily see it go back down to that 13 area or whatever. But we can actually work this out, because what this is, and you know, you can kind of see it if you, I don't want to say squint your eyes, but if you look at this top and you look at this structure, it looks almost the same, right? And what this is it's a build out that could ultimately result in a final spring later, you know, because it's a breakout. And when I go back, and I got to stress it, when I go back and I look at this, the important thing here is that this is a break of a creek. Like, this is the first distribution. It's the downward wave. So there's an upward wave that makes a high here after a low. So I usually call this like January move or something like that. If you want to look at it like that, you can. Or you can look at this as like a January move if this is like a long-term depression. But ultimately, like, once it breaks and you get this kind of a top, you're now in like a different stage because you're over that creek. And this did happen for AMC, and it did happen for GME. So yeah, this is a really close setup. You've obviously got a lot of, you got a lot of potential here for bottoming action. So then what you do is you go back and you look at where would that bottom be set up, right? So you see that upward trend. Oh no, I'm getting like pinwheel of death right now for some reason. You see that upward trend that I've got drawn here? That's typical of it to have some kind of an upward motion. In the case of this quote unquote master fractal, this ends up being a really long head and shoulder build out, right? With a final drop that goes back to the creek eventually. I'm not seeing that as a necessary part of this per se. But it is at this point where I think it's ready to make this bottom, or we're getting really close to it, because this bottom is that typical bottom that you see on AMC and GME sometimes, where you do this kind of a small floor, big floor business. This look familiar? We've been talking about this guy a lot. This is where that bottom I first saw it. It's like kind of like in these bottoms right here. That's where that would come into play. And then you can see the return actually goes up really high. It goes back to here, but you have to triangulate it, right? So long term, we're looking at this and we're not feeling great about it. This could be one of those things that lasts until November, and it could have some pretty massive swings in it. When I'm being kind of negative Nancy, and I'm looking at, and no offense if your name is Nancy, but when I'm being like a negative about stuff, it's not because I don't want it to go. It's because there's a possibility that it just takes a while. And right now, my negativity with the downward motions has been mostly about these S curves and these longer targets. But this is a little different, because what this would imply is that those targets might be hit, but they don't get hit right now. So like, you get to those targets at some point down the road, but what you're doing is you're going back through and retesting all the levels. And I've made some concessions about this in the past, but what this backup is right here, because this is an SOS essentially with a backup. And what this SOS essentially does right here, when it pushes over the range, other people might look at that and say it's just a phase B top or whatever. I don't care. I look at it as it's an SOS that's going back down across that creek. And what it's doing is it's checking liquidity levels back through this range that it's going across. This is very horizontal compared to what we're seeing on GME per se. Again, GME's is a little different than AMC's. AMC's is like way low. It's hard to even say what the heck, the difference would be there. But I'm not even there yet. I'm not looking at AMC right now. AMC's at 453, by the way. No one should be surprised that we're going to camp at 450, but it seems like most of the price action, we were right, probably happened this morning. I think the rest of this is going to be important. So I'm going to spend some time on this because I really think that the rest of this price action could determine what happens over the next few months. And we have the ability here, it's a strange thing to try to do, but we might have the ability here to actually time this out. Because most of these lines that you can draw can all be drawn from this top. And I tried to do it yesterday or the day before or something, and I couldn't quite get it right. I was kind of like going in circles. But I think we can do it. And so right now, what I'm looking at is measuring essentially a structure that's possible. And I think it makes sense to do this for GME right now. For AMC, do I think we're going to $1? No, I don't. I don't think this is written in stone just yet. What is written in stone is this breakdown. That's clear to me. That's evident. We're sandwiched right now between like a 4-hour moving average. This is kind of a moving support here where you might find support, and a whole lot of lower time frame EMAs that are now above us. So we're really like pinching. If you look at this without after hours on, I believe that the 4 hour is like up here already. It's not like we're kind of sitting underneath it. So it doesn't look great. Okay. The hook was the realistic probability here. After the hook, you could have a sell-off. I don't think this sell-off, at least immediately, goes lower than $3, or about $3. I think after that point in time, there could be some sideways action that results in down. But that's only if this S-curve finishes. Okay, if there's a shallow S-curve here, then we're talking about a build-out that could be a lot more like this, right? Where you finish a little early and then you end up with a sideways action, and that could take months. And by the way, some of you who've been around for a while, you might know this, but this motion right here, this is essentially what happened in the January run-up. I know I just made it look really weird, but this was like that January push and the huge pullback, remember? And then it sat low and it reaccumulated. And then once it finished reaccumulating, it pushed out. It didn't have a low dip. There was no like low spring motion in the end. It's the same fractal. So it's the cat ear, but it finished high. So like, it's super relevant to me right now that we would do this. Like, it just doesn't make sense that we wouldn't do this right now. So that's why I'm kind of saying that I think we should be aware. I think a lot of people are upset because of how inconsistent TA is with meme stocks. Then when it doesn't work out, there's always adjustments and justifications. I don't feel like I've spoken with any inconsistency though, so I'm not really sure what you're addressing. If you address the downside out the gate, then you're not speaking with inconsistency if it goes down. I think people get frustrated because they hear what they want to hear. They don't hear the negative side. I could go back. I mean, we could look at Monday. I was really bullish until we hit this low point, and I'll give you that. But even still, like, I'm trying to remember, like, was there ever a time, and y'all correct me, but was there ever a time recently that I didn't look and say that we have to worry about March? Like, I feel like I said that since day one. Like, as soon as we ran up, I said, you can't just look at January. You also have to look at March. So I'm not trying to beat up on you, but I know why you're frustrated. I get it. And I get the idea of like adjustments and justifications, but I'm not justifying myself retrospectively here. Like, I did that. So like, that's not really fair to me to say like it's some kind of thinking error where I'm just justifying my own TA. That's not what I'm doing. If that makes you frustrated, then I don't think people were listening. Like, that's not my fault. That's not on me. I'm not gonna rag on anybody, but I'm not this hopium guy that just says it has to go. I was very clear from like the first moment we ran up. I was clear even before that moment. The first video I made this year was we could go up to 14 and then frankly we could go down as far as 1, and I made a case that was technically very possible. So I don't feel like I'm justifying anything right now. Like, I'm not justifying the downside. I'm telling you that this is me misreading it. That's just an error locally. That's what happened yesterday and into the end of the day. It's me misreading it. That might have been like a justification. But us coming down again, I don't think so. You can't put that on me anyways. Like, good luck. You know what I mean? Like, you could try, but I could go back to the first video of the year and talk about how I thought an up thrust with a downward new bottom is possible. So I'm sitting here shrugging like, I don't know what else you want. I don't think technical analysis is designed to be a crystal ball, but I think it's designed to give you really good price targets. And then when you see those entries and exits, you take them. You know, it's like getting on a bus. Oh, we're going this way? All right, here's how far I'm going to go. And then that's it. And then you wait and see. You have to wait and see. You can't, at that point, ever since we came up the first day, it's only been a week, you know? It's only been a week. But since day one, people were asking me, what's your prediction? What do you think is going to happen long term? What's this? What's that? And again, I was like, well, if we have an upside, it's the if-then statements. If we have an upside, here's where it needs to catch. Did it catch at 5:30, y'all? No. What happened at 5:30? We rejected. What did I say like the beginning of the week? I don't want to reject at 5:30. I could not have been more clear. I said, if we reject at 5:30, there's a possibility we're going to head lower. What happened? We headed lower. We're $1 lower, you know? Like, I just don't understand I get the frustration maybe when there's a false expectation that if I come on and I listen to the TA for 5 minutes, I'm going to get everything I need to know, and I'm going to know how to trade, and I'm going to do all these trades perfectly. I'm going to make a lot of money, and then I'm going to love Booksy because I think he's like a genius or something. Like, that is not my expectation. I'm a human being. I make mistakes. Technical analysis is based on like statistics and math and all these other things. If you're relying on somebody else to do that for you, you have to realize that sometimes they don't do the math right. They just don't. Or sometimes they miss something. They just miss it. I feel like I've never felt better though. I mean, I know I'm being really defensive, but I'm speaking in like as a generality. Like, I don't think what you're saying necessarily was directed at me. I think you're frustrated at the TA process, and I get that. But as a generality, like, I don't feel like I did anything wrong this time. I feel like I was really on point. I think I was really clear with my price targets. I was very, very clear that I didn't want to get beneath 530. I thought we would get pinned. That's what happened. So I don't know what to tell you. Like, that came from technical analysis, and it was right. Now, could we recover? Yes, but you have to make those motions. These are not eventualities. Like, they're not it's not like you're eventually going to get here because I put a number on the chart. That's not how it works. Technical analysis is setup and confirmation. Setup, confirmation. Setup, confirmation. Setup, confirmation. Setup is like 99% of what you're doing. Confirmation is that very last moment right before the move. We have not gotten confirmation at all. And I have never once said, ever since we dropped beneath like 530, that we've gotten confirmation. I've been very careful about that. And if you think technical analysis, I'm not saying you, as in you, I'm saying if you're a person that thinks technical analysis is going to give you the answers every single step of the way, that's not true. Like, that is not a fact. That is not how technical analysis works. Your expectations are not being met because that's not reality. So if that's you, I'm not lecturing you. I'm not telling you that you're wrong. I'm telling you that that particular part of your thinking is not correct, and you need to reevaluate what technical analysis is. You should be, in my opinion, if I'm looking at somebody who's doing TA, like, I would be listening to levels. I would be listening whenever I say something like confirmation is here. That's it. Like, I wouldn't be making trades based on what that person says, and I would definitely not be making trades based on a couple of lines that that person draws. What I'd be listening for is, okay, Booksy said if this happens, we might go here. Fine. I trust that he's doing the math right because I'm watching him do it. I agree with it. Maybe in this case, I agree with it. But he said very clearly that if we break down below this particular creek, it could be bearish. So why would I enter? Like, I wouldn't do that. Now, if that's not your cup of tea and you don't like that kind of approach because you feel like it's too on the seat or like fly by the seat of your pants or whatever, that's okay. But the only other approach to, aside from technical analysis, which is really simple, I mean, I could draw a trend line and say right now, like, for example, I could draw a trend here and say, like, look, that's my technical analysis. If it breaks this trend, it's going. Maybe that's right, maybe that's wrong. It depends on a lot of things. Sometimes the trend is like perfect, sometimes it's not perfect or it's incomplete. That could be it. That's still technical analysis. The only other way to trade the market is just pure fundamentals. And pure fundamentals didn't mean jack diddly squat when this thing ran from like $2 to $72. So from a fundamental standpoint, there was like no justification for that move. Like, none. I do not think you can find one. And over the last 3 years, people have tried to find reasons that happened. Most of them are technical reasons. But like, that's the only other way to trade the market. That's it. You either chart and you learn about charting and you learn about basics of charting and you trade that way, or you trade based on fundamentals. And if you trade based on fundamentals, then AMC is not a great fundamental stock. It's just not. AMC is a stock that has more liability than it does income. It has more debt. If it were to somehow liquidate all of its positions, it would not be in the black. It would be negative. Therefore, it is not a good trade. Like, from a lot of institutional standpoint, that's why it gets shorted so much. Because they look at it and they see this movie company has a problem on the horizon. You have a rise of Netflix, all this other junk. They think movie theaters are not going to be as profitable. They don't see a good movie slate. That's a negative. Yada, yada, yada. But at the bottom of all that is AMC has a debt problem, a big debt problem. And if they don't fix that, then they're not getting out. You're not getting a fundamentally solid case. Like, you're just not going to get it. So I'm all for this kind of price action to happen, but I can only see it happening right now on a technical move, not on a fundamental move. And some of you might say, well, AMC was undervalued down here. Okay, fine. Make the argument. That's your case. Then that's your argument. Then that's it. Like, we can kind of stop there and be like, okay, so you're making a case that it's undervalued when it's down here at $2.45, even though if they liquidated everything, they wouldn't have enough to pay off their debts. I mean, it's a problem, big problem, you know? And I've heard a lot of people talk about how, oh, it can't go this low or it can't go that low because of then your what do they call it? Market cap is too low and it's bankrupt and this and this. I'm like, well, you have to understand, like, the reason that people are shorting this stock is, one, there's so much retail in it that it's very, very profitable to short it. Two, there's a lot of interest in shorting it because a lot of people don't think that AMC is going to make it as a company. So I'm fighting against that when I'm making technical call-outs that say, I think, and that's where I understand that. I don't think everybody who does, I'm going to put air quotes here, you can't see it, but I don't think anybody who air quote, unquote, does TA understands that. I think that a lot of people are, frankly, I don't want to say the word delusional, but it's like they think that AMC deserves to be way higher for some other reason. And it just doesn't, it just doesn't. Or it deserves to be higher because I'm red because I held shares. I held shares too. I still have shares that are down 90 some odd % or whatever. I'm in that same position, but I'm making use of my time by learning to be a strong technical trader. And I think I'm doing a pretty dang good job. So I know it's not a personal attack. Somebody was saying, like, it's not a personal attack. I think what you're saying is that TA doesn't do what you want it to do. And so you don't find it to be as useful. And I'm okay with that. I think that's a very valid point. I think if you believe that it just doesn't do what you want it to do, maybe it's not that useful, It's not a great analogy, but like, I kind of think that's the same with any tool in life. Like, if you don't know how to use the tool correctly, or if you're finding that tool doesn't work, it might be a good idea to look around you and see if other people know how to use that tool correctly. Like, it could just be, it's not my forte. Like, I'm not really good at it. I don't really like it. Maybe the market's not for you, maybe it's not the place you want to be. Like, you just don't want to be here. I'm not going to be good at everything I do in life. There's things that I'm pretty good at, and there's things that I'm not that good at. If I didn't like computers and I didn't like using computers because they don't do what I want them to do, and if I hit the wrong button, then everything screws up and I can't handle that, I shouldn't be working on computers unless I'm willing to learn the skill. It's a stupid analogy, but you get what I'm saying? Like, there are a lot of people who've made a lot of money as technical traders because they have a system, they stick with that system, they have a set of rules, they stick with that set of rules. They get statistically more wins than they do losses. They don't even need 90% wins. They need like 51% wins. They're going to get more money. If you win 51% of the time, as long as you're mitigating those losses, you're going to be fine. But if you go all in on every move and you don't have any plan for getting out, TA is going to seem like a bunch of hoopla to you because you're going to constantly have your expectations ripped out. You're going to constantly be feeling like a rug pull has been done. And you're unstable in that way. Like, that I can't rely on this because it keeps rug pulling, because institutions manipulate too much, because this or that. We wouldn't have even had this run, in my opinion, without the proper technical setup. So, like, I don't know what you people think a squeeze is, but a squeeze is a technical play. Like, it's like one of the most technical plays that could possibly exist. It's literally built on the premise of share availability. It's not built on fundamentals, So, rant over. I'm really not offended by what you're saying, but when we get to these high stress moments, every time, without fail, someone will come in and they'll be really disappointed. And I feel I've taken it upon myself as an obligation to express my own opinion about it. I don't have to do that. I could just say, yeah, well, that's you. Good luck. There's been times where I've been like kind of like that, but I want to make it clear, like, that's what I'm about. you know. And it's not just learning, it's also like that process of observation today gave us some like really clear insight. Like we just did I did like 2.5 hours straight of almost just pure analysis. And it gave us like out the gate, like I had ideas about what might happen today, you know? And I said, the probability is stacked here, that we were going to pump up to about 480 and then chop down to about 450. That's a win in my book. Like, I was really excited that this setup could result in a nice move to the upside if it were to continue. I gave you guys the targets. It didn't continue. It faked out. It dried up. I was very clear that I would not be buying in unless I saw a big volume push up to here and it held support. It did not do that. This setup failed to produce any kind of a run. Does that make the TA inconsistent, or does that mean that there wasn't enough demand? I don't know. Chicken and the egg, you know? I don't see it as like, oh no, that it let me down. No, I mean, this didn't let me down. This pattern has not always produced a result. And I said it very clearly, I think a couple times, that it's not always it's not always going to break out. Sometimes it doesn't. But if the setup is there and it's good, it might. And then when it doesn't, what do? Well, let's go back and look at EMAs, and that's what I started doing. Like, let's just go look at the bigger picture. Let's work our way back out. Let's get out of the nitty-gritty. I was trying to do that as a way of like, not comforting, but as a getting a big picture view, like hourglass. Okay, we're staring at this micro pattern. It didn't work out. It doesn't always work out. So then let's look at the big picture. How do we move forward from there? My suggestion was, and I know I ranted a bit, but my suggestion was that we look at the big picture. And it's psychological, guys. It really is. Like, as soon as this run didn't work out, lots of people will stop like tuning in, you know, because they're like, well, we're not running. We're just going to go to 450. Of course, that's the reality. Is probably it's true. Like, we're more than likely going to chop and consolidate. It's going to be a boring day. I'm not streaming all day. I'm only going to stream till about noon. If something crazy happens, maybe I'll come back. But it's a risky adventure. Yeah, 2 or 3 people said that. I completely agree. The market is all risk reward, and you have to be a risk manager. Like, that's the best thing I've heard in a while. Risk management and discipline. But like, that idea of management is so important. And 88 bits and bytes, you hit it like right on the head. You're the manager. I'm not the manager, right? Roaring Kitty's not the manager. You're not just like a player. You're not just some like pawn in a game. That's not at all what's happening. If that's what you think, then we're all just kind of, if I think that, like, oh, I'm just a pawn in the game, you know, and you just get frustrated, right? And then you want to like get mad and stick it to the man and all this stuff. But that's not really the case. If you're a good trader, you're thinking always about management. I'm managing an account. It's my job to make this account grow. Just like an institutional trader who's trying to make their people's 401ks grow or whatever. In some cases, they're just trying to buy another yacht. But not all of them are doing that, right? And like, some people are working for places that controlled our parents' 401ks, you know? Like, I'm a younger guy. I don't have a 401k. Like, I got a Roth IRA. That's what I've got. And I've got my wife's retirement account. But a lot of our parents, they grew up in a, you know, and you have an environment where you like can pour into a 401k. And that's what hedge funds and all those money managing people do, you know. That's how those accounts grow. They don't just magically grow. I mean, you give the bank your money, the only reason it's growing is because they're using your money. They see it as, okay, we can take this and invest it and grow. So, I mean, like, you're the manager of your own account. You have to manage the risk. You have to manage your account. If you see that that account's not growing, there's something that's wrong, right? And you need to make a change. Like, I feel the same way. My account went from really great to not great in about August of 2022. And it was at that point that I realized that I was putting way too much hope in AMC as a stock, where it's always possible this stock could just keep getting rug pulled. And it wasn't like I was out there on the street telling people, like, don't invest in AMC. I was kind of like, well, I'm still in it. I'm still going to stick with the people that have wanted me to talk about it. I'll invest in it if I see a good investment opportunity. And that's what I did on this run up. Invested in that opportunity that came about. But I've largely been pretty hands off outside of a few plays here and there on AMC. Most of it's just a share position. I'm just kind of sitting on it. Okay. I've been much more hands-on with other stocks. Like, I invested more heavily in stocks like ChargePoint that seem to have be a bottoming process. I invested in MPW, which seems to have a decent chance of having a good run, and it did. You know what I mean? Like, I invested in IWM just as an ETF. I invested in GME for this run. Like, I thought this was a good opportunity. When it broke that thing, I invested. That's it. I'm looking at ways of growing my account, and I don't mind the downside if I can play off of it, but I told y'all, like, I hedged here, but it didn't really matter because the IV is getting crushed anyways, you know? And that's part of the game too, is like options chain can get really messed up in this sideways action, and that's part of the game because they're trying to get better entries and stuff, yada, 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 reload. The patient trader in that case is going to win, you know. And sometimes you just take the losses and you say, whatever, didn't work out. Didn't work out. What do you mean, you people? Everybody. I'm not somebody who has a yacht who is trying to like screw people over or something. And even if I did have a yacht, I may not be a bad person. Like, I'm not of the opinion that all rich people are somehow evil or something. Sometimes people, they make money and they do it the right way and they get lucky. But it doesn't matter if you have a lot of money or you have a little bit of money. You're still a manager. Like, that's what I'm trying to get across. So if you only have $2,000 and you're planning on growing that $2,000 because you want to have your kids wants to have a college fund, you have to then make a very good decisions about what is worth it to you. Where is the risk reward, right? Am I willing to risk this college fund for a maximum reward, or would it be better for me to spread out my investments and have a more moderated risk so that I could then make sure that 15 years down the line or whenever it is you start it, there's an adequate fund there. It doesn't have to be that I make $1 million overnight. It's I turn this 2,000 into 40,000 over the course of like a decade. That's a very different plan, right? And it changes the way you manage your money as your goals. You don't need to make big money, you know? I think there's it's a fun thing to do. Obviously it's like playing in a casino, you know, when you get those big wins, you're like really excited. It's fun. It is. But it's not life either. It's just, that just happens sometimes in the market. I really don't think it happens as often as some people make it seem. And if you're finding yourself thinking that, you might be following the wrong people on Twitter or X or whatever. If somebody's not telling you about their losses, I wouldn't follow them. I just wouldn't, because you're going to get that kind of like, everything's great, you know, for them and it's not great for me kind of stuff. It's called like envy. You think like their life is perfect. It's like the Facebook effect or whatever. People only post what they want to post. It's silly. speaking of technicals, so this is an interesting little spot. It looks like it's working out another shoulder. So this is starting to turn into like a complex head and shoulder. And the reason that I think that is kind of self-evident. You can see it here on the 6 minute. There's kind of a pattern of head and shoulder here. The other reason I'm seeing that is you see this ascension right here. This is it's like a, I would call it like a direct assault on the head and shoulder structure. Like, I'm going to use that word. It's like clearly we're attacking this idea that we're in another head and shoulder, because notice the bottom and the tops here. And it looks like, of course, the complexity of the head and shoulder could be met. But then look at the pattern of choice. It's an ascending triangle. So it's an attack on that range here. Yeah. So I'm sorry for ranting for a while. I know that a lot of people don't want to hear that crap, so they turn it off. But it was not against, I don't even remember who said it now. I had to go back in the chat. It wasn't against you, if you're still listening. It really wasn't. I empathize with you, actually, because I feel like there's been a lot of times where I felt the same way about people that were doing technicals. But then I found out later that they weren't even like, I mean, it just was really clear that they weren't even considering downside at all. And they didn't even have any real idea of what that would look like. So, you probably know who I'm talking about. I'm not going to say their name. Shots fired. Just kidding. I'm not trying to pick a fight with anybody. But yeah, this looks like a pretty clear like attack on that 460 area. You can see the pattern of choice here is this like ascending. It might be a little more like a double top, you know, an inverted W, where it looks more like it's just double tapping that line. I will say if it rejects after that kind of a motion, it's not great. So it hit 459 twice and it's just kind of stuck. No, that's not who I'm talking about. Although maybe they're like that. I don't know. I think it began with a couple really popular YouTubers, and that's unfortunately, it's not like I blame them for like what happened, but that would be silly. But they never talked about, almost ever talked about potential downside when we were in that big peak. And looking back, that was it was probably because it wasn't popular to do that. I think I hate to say that about it, but I can't imagine, or they just really genuinely didn't think it was possible. I just can't imagine looking back on it, not seeing that as a possibility. And none of those people are bad people. Like, that's the thing. Is like it's just a system. Like, I'm critiquing the system of what they were doing. I'm not critiquing them as people. Like, they're probably not bad people at all. I don't really know them, so it's not really fair for me to say that. But looking back on it, I'm like, yeah, it was a lot of bad TA back then. That's part of the reason I started doing it on my own. And I've had my share of bad TA, so just misreading something or not seeing something, it's no different. But that was a big part of the reason why I was like, I don't really want to follow people anymore. I started doing Wrench Capital. I don't know. Some people will remember that. It wasn't even like Wrench Capital's like videos. He did some of them, but he was all about like levels. He wouldn't tell you anything else. He would just say, we're at this level. There's a level below us and there's a level above us. And he would just talk about being comfortable in a range and this and that, which later I feel like I've kind of translated that into, okay, you're talking about consolidation and exhausting a range before you move on. But I don't look at it the way he would look at it now. But I started watching his stream, and there was like 40 people in there regularly, and it was just like an empty room basically. He didn't talk. It was just a live stream with like some music. I found that to be a lot more comforting than the other guys. I just got sick of it. That was my story anyways. And then I was like, maybe I'm like, I should just do this on my own. And then suddenly had a YouTube channel with a bunch of people. Yeah, there we go. There's that double top. It looks like it's going to just weakly push down. Well, what this day has mostly amounted to is like a build up and then a walk down. And I know that 450 is in mind, but I would not be surprised if we did like a fuller walk down here. I don't know what you call it. I think there is an actual name for this bottom. And it's not W. I know that people like call it a W, but there's a name for a bottom that has like I can't remember what it's called. It's not a W where we're thinking about like just a creek cross and it's low. It's like where the bottom comes really high. It looks a lot like a tent or something. I'll have to look it up. I think there's a technical name for it. But we've seen it before. It's not the best bottom. I wouldn't even necessarily call it a bottom in some cases, but it's where it's like basically you get the M shape up and then you get the M shape back down if you want to do it like in our terms. And it's essentially like a large walk up and walk back down where you get like a big head and shoulder. And it looks like a head and shoulder. It doesn't always break down like a head and shoulder. A head and shoulder is typically at a top, like after a move up, not typically at a bottom. But sometimes it appears on like bottoms. And I cannot for the life of me remember what it's called. And again, I don't want to give people like hopium that this is somehow going to be like a bottom, but there is a pattern like that. And it would be like this, something like this, if it worked out that way today. It's like a double bottom more than it is like a W, but it has a really high middle. Maybe it's just called like a triangle bottom. It's super straightforward. I remember it being like really simple. So it kind of, I think it might be just like I don't know. Forget it. It's not worth it. It's not worth going on and on about it. If I can't think of it right away, then it's not really, there's no point. So who cares? All right. Well, we're working through the, I'm going to go ahead and just delete these other ones. I think we're going to have very little chance that these others happen, which is kind of what I thought anyways. I'm probably going to work through some of these shoulders today. It might be more like an arc. It may not go as low. You can see it kind of working that way on RSI. It looks like just a build up to come back down. It's very simple. I would be somewhat optimistic if we closed with some kind of support over this creek here. I wouldn't be like overly optimistic, but I would say that's better than not closing beneath it. So if we can manage to close at 450 today at this point, that actually is not that bad. You see that it did hold. It wasn't the best hold, but it did kind of hold. And based on this, it does look like, yeah, it does look like they might be trying to set up for a lower drop here. So we may get down low today. But if we see a recovery move and it closes high, we'll see. I'm inclined to think that could be bullish, but looking at it now, I'm kind of like, well, if the goal is just to set up where it looks bullish, let's say I'm an operator and I'm like, I want it to look bullish, but I'm going to go down on Monday. That might be that might be really effective right there, because you could make it look really bullish, but it would actually be like a hooking action here, where this is like a creek walk down and a rejection, but it stops short of actually breaking a trend. I could see that. So right now that looks just like a double top to me. Rejection off of 459. So 459 is a place to beat as well. Now it's providing a lot more resistance. That head and shoulder built those first two bumps here off of that resistance. They're really about going back up and testing this floor. So another way to look at this would be to consider that like where the supply demand is right now, like in terms of the resistance, it's like right here. And we might need to work back down through it. So going above this with some support would be a little more positive right now. Being pinned beneath it may be perceived as negative. We'll see. It definitely appears that these two wicks down are probably pointing to a lower target. I'd be willing to venture they're probably going to be met today. It could be a double bottom test, could be a fake out. Institutions are really good about hiding their intentions with any kind of move. So they're often going to throw throw you a bone here and there to make you feel like you got it, and then you get these deceptive kind of moves that make you second guess. So I was most interested today in trying to do the GME bit, and then I got kind of sidetracked because I was, ranting about stuff. Check Discord channel. Oh, that's a good book. Those are all the bottoms. Hold on, let me see. Yeah, it's like that basic one. I mean, it looks a lot like just a W. It's not a V. It's like... maybe it's like something out of a dream. Oh, it's like that diamond bottom one. It's kind of like a diamond bottom, or kind of like the Eve and Adam bottom. There's so many. Yeah, I guess it's most like a diamond bottom. It's kind of like this guy. Well, we know that didn't work out yesterday, so that's not really helpful. It never broke out, just to be fair, but it wasn't, we just never got over that line. It's not unlike that, though, so yeah, we'll see. Booksy, is it possible that... I'm going to delete this stuff. Look, it's totally possible that we could still see a some kind of bottoming action here that results in a move back up. The confirmations are not really the questions in my mind. So I know I deleted that stuff. You still don't have any confirmation unless you come back up. So I deleted it earlier. I don't personally feel like it's that relevant anymore. Unless we were to recapture this trend first, I don't really feel like this could be anything but like a, the beginnings of like a cat ear or something, and that's exactly what this would do if it hooked underneath in this wave. This would be like the lower wave, and then it would come up. This is the structure that you typically would see. So just keep in mind that like that motion is not particularly bullish at all. And it's still no different. You need to come all the way up here. And frankly, we already kind of left that structure behind. So it would be a very, very big reversal move that would have to get us there. And I'm not confident we would make that move today. Shoot, man. I'm all for that kind of stuff. I really am. Better late than never, right? If that kind of stuff happens. But this seems like a likely possibility here, just to kind of finish out the day. And then the head and shoulder, I just removed it, but that's also a possibility. Just working out those bumps. And this would work out the bumps too, by the way. This would just work out the bumps in a way that's more like horizontal. So you'd still see like 2 bumps here probably, because that's what the cat ear looks like. You would see like 1 if it went up there, right? It hasn't happened yet. But if we did, it would be like 1 and then 2 kind of business, So I don't really think it matters if it happens here or if it happens down here. It's still like finishing that head and shoulder build out. Makes sense? Speaking of head and shoulder build outs, what about that, Booksy? Isn't that like a head and shoulder build out? Isn't that like the same thing? No, because this came above. They're both pushing on the creek, and this did push against the creek. So you could make that argument that this is a push against whatever trend, and maybe it's the same. We're kind of splitting hairs. I don't really want to do that. So could it be a similar kind of setup where this is an exploration of liquidity and you're getting the head and shoulders? It looks pretty similar, Booksy. Maybe. It wouldn't matter though, because no matter what happens, you'd have to get the spring and you're still going to get up here. Like there's still going to be that confirmation. That was a weird like bean. I made like a bean shape. You're still going to get that confirmation up high. So it matters not if that is it or not. That's what, again, with fractals, you can kind of start grasping at everything. But if the fractal analysis is good, then you're probably going to see the same end result anyways. So let's not worry about that as much as just... And we don't see also here on this secondary head and shoulder, we really don't see a very strong, maybe a strong push, if you will. Arguably, it would have to be like this kind of downward motion here, which might imply that you end the day at 450 and then dump Monday. Now I'm curious. Now I'm really curious because of that double bottom right there. I want to see something. Yeah. It's still like, at the end of the day, I'd see it as a way of exploring. I would see it more as a way of exploring previous liquidity, and we're not really doing that here. We're kind of going... It's definitely a trend, though. Well, that's fun. Let's take a look closer. That's interesting. I'd be hard pressed to say it wasn't respected previously. It definitely seems like it was respected. But it's a weird pattern if it is that. So I'll doodle it out and you can see what the completion of that pattern might look like. Basically, this would be, it would have to be a bottom, but it's so flat. Maybe it's already done this like top area. I don't know. It doesn't really make sense. Well, what else could I do? I could use the hook angle because usually that presents itself in the hook angle. That's what that whole push-up's about right here. Is like coming back to retest that trend. And then this guy is the same way. It comes back to retest the previous one. This is a stretch, by the way. If you're like frustrated with what I'm doing right now, don't worry. It is a bit of a stretch. So maybe that. It looks close to parallel to this bottom. We got to remember the day ends at 450. This is like a double top on this trend. Seems like it already rejected there. Well, in any case, this gobbledygook would be finished regardless. Whatever this crap is. I don't think it really matters. I already know that's the hook down into that trend. It didn't hold. That's like doing this right here. That's what that early thing was. Or rather, out here. So yeah, both of those conditions could be met because it is an intersection, roughly. It's a rough intersection, but it's kind of a rough intersection of those two checks. I think that, again, you think of it in terms of waveform, and it's going back up to check the creeks. It makes the bottom less relevant because you're just like, whatever, it's just a bottom. I don't really care if it matches. This is interesting, though, because this is very close to what we see. Again, this doesn't always go back up, though. So it's like this could just be indicative of where we drop to later. It's not necessarily accumulation. But it seems pretty close. Like it's a pretty good match there. All right, let's just see if we can get those two major angles on the chart. I got one right here. I'm going to make it like a bold white. And I think the other one is this guy. So those are the two major angles, just to keep it simple. I'm going to get rid of this. I'm going to keep this one, but I'm going to make it a little bit lighter. And I'm going to keep this one, but I'm also going to make it a little bit lighter because I think these two matter later. This one probably wouldn't matter today at all. It could matter in the future. I've never thought of that ascending accumulation as this. Why not? I don't know. It does look like a beak, doesn't it? I guess I've never really thought of it like this, though. Like that it could be a delayed action. Like this is the same motion as that ascending accumulation. It's right here. I wonder why sometimes it doesn't. Yeah, because you're buying back up through the range. This is sometimes it just doesn't work. You don't get like an immediate recovery. You get like a So here's the justification. You guys are like, great. So remember that thing a guy was talking about? He said, I don't really like that there's always justification for everything. Yeah, here it is. Figures. No, for real though, like this is actually, I mean, I'm learning something new right now. So if you need to critique me about it, you can critique me about it. But I'm actually not seen that before as just the ascending accumulation model. That motion is just a very like long-winded version of what happens on a retest of that creek, because you come back down to it multiple times. I gotta mark this up. It's gonna get ugly. In this case, this ends up being like the critical level. So there's a like a wave right here that like shrinks. And that was just an iterative shrinkage. It's not anything like too crazy. So we might be able to identify that though. It might be right where we're at. It might be this 458 level. And this also checks here, which for us would be way up at 83. I kind of hate Fridays on the market. I feel like I do a whole lot and then I don't really accomplish very much. But I'm kind of feeling this right now, so I'm going to go with it. I think it's right there. It could be this higher one, but there's only 2 hits there, so I don't know. Okay, so what are we learning here, Booksy? Aside from you can doodle lines. Let's make sure this is right. Should be right on that breakdown. If that's the case, then it's already turned down, because that would be like the turn up. Turn up. This is a weird structure, y'all. That's super weird looking. It looks just like a distribution because at the end, this wicked higher. So it has this kind of mirrored out devil horn look thing to it. It's very strange. What if it's all of that, Booksy? Well, that is what happens there, but then you would go down low. So if that's it, we didn't even make it back up to those checks. We stayed super low. This was like pinned down. I don't like that though. It makes me feel like I'm jumping the gun. Like that's too soon. I don't know. It's too soon for that. It hasn't even gone up and checked that level yet. It bothers me. Well, then again, you know, maybe it doesn't matter that much. I'm making some assumptions here based on just an old school, like backwards looking fractal, but this is just ultimately like it's just a head and shoulder. It's built on a certain kind of foundation, so we might want to just do that instead and not worry too much about the other part. And I deleted that line, which is kind of funny. as it might be like super relevant. See that there's no line there. It just doesn't exist. Well, this one didn't come down all the way either. It stayed pretty high up, so maybe it'd be better to draw it out here to this guy and ignore that second mark here, because it didn't do that. The example I'm using is something I call the master fractal, just because it's an easy, it has like everything. You pretty much could find any part of this stock in there as an example. That definitely looks right to me. There we go. Okay, so forget this upward movement stuff just for now. I think that level's important, but I'm going to get rid of this. But we had the cross, and I think that also is important. It could matter still. We still might go up there to it. So we got the downward motion, which is this pink line. That's this white one. We've got this flat area. And then the upward motion might indicate a future move. And it's a big question mark, so I'm not sure. It might indicate a future move to a high. So I can keep that on there, but I don't think it's necessarily going to hit that, because this is one of those things that I think it just depends on the setup. There's a lot of places it could stop before it got there. And fractals, even proportionally, might not do exactly the same thing every time. So, like, it already looks weird to me. Like, this came up, it may have already hit it, I guess is what I'm trying to say. Like that kind of looks like it already reached it right there, you know? So I'm a little bit lost on that. Let me look at the, this doesn't really help either. I'm not seeing it. I see this bottom as more of a bottom here. It's kind of interesting. It started even higher. This just looks like a four top to me, which it of course does here as well. So let's take back. I suppose that's all there is to it. Trying to find some kind of magic bullet, but I don't think it's the magic bullet. I think these are just waveform lines. So they're just possibilities. You don't have to go up here though. That would be really high for this head and shoulder structure. Because now that we have this, you can then take that and model it out like this way. And you can see that it's pretty much like contained itself anyways. You can see the structure there is very contained. This goes a little higher, yeah, but that's what I'm thinking. Like maybe these checks are, ooh, that's a weird like crosshair. These checks might not happen on an angle. They may just be like, again, best average, and I think it's already done it. So, yep. Seems right to me. Be nice. Hey, you cuddle up next to him. If you cuddle up next to him, you can't hiss at him when he looks at you. One of my cats like hates my other cat. I don't know why, but she just like hates him. She will not look at him without hissing, and I don't get it. They don't like fight usually, but I just don't get it. She'll like walk up to him and like sit next to him to sleep. And if he doesn't look at her, she'll be fine. But if he looks around like, hey, who's sitting next to me? She'll just like hiss in his face. She just doesn't feel safe around him, I guess. This is going to make you feel bad, right? This makes you feel a little nervous. I don't like that. Yeah, this is like an LSPY or whatever, probably. And I don't think we're going to breach right here. I know this is strange. I'm doing weird stuff. I think it's probably done. Because a head and shoulder is usually about even parts too. Like that's the other thing, is like timing is usually pretty even paced. So it's about to be finished. I'm using boxes as measuring tools, just keeping it simple. See that? So I'm looking at kind of where it started and ended. I think it's probably about to be done. I don't think this is likely to advance. Now, if it did advance, could be a bit of a change of character. That'd be cool. Change of character is where the current price action doesn't do what you think it's going to do, and it's not just what you think it's going to do. It's like, well, the volume changes. Like it's like a really big change in the pattern of volume and price action, where it kind of goes against the setup. Yep. Right now, I think what's likely is we're going to drop back down to 427 again. You might say, Booksy, you can't possibly know that. Well, it has already kind of left behind that possible dip right here. Like if this was the final cat ear, then it didn't go all the way down. You might make an argument there, but usually what we find is that this sort of plays out to the end in that head and shoulder structure with a drop. And the drop is typically like the last thing that happens. And so you take that line and you work it backwards, and this kind of makes sense of like where it ends up in the future. I don't know. I think you could probably argue that it didn't do it right here. It should have dropped like here and gone down. We were right about where it sat all day. That ended up being right. So it's definitely chewing up the same area, like trade, 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 trade. So this structure was effective in bringing it back down to the same spots here. Why? Why go down here? Why do this here? I don't know. Well, it is that top. That probably is it. That's probably the explanation. Yeah, it's along that trend. I'll bring that hopium to y'all later with some kind of video or something, but that's this weekend. It's not really where I want it to be, because when we left, we exited, we made that support higher up here at 5, and so it feels bad to be stuck beneath it. It looks ugly in some regards, so on and so forth. But we've talked about that enough today. I think everybody's sick of that. Like this is also like a really important long-term creek here, so I think we're chewing up along that creek. I don't know exactly the reason we would trade here specifically, because I think this is probably high liquidity from earnings. So unless there was an earnings trade, let's say somebody had like a position, like a leap position that they bought back here at earnings. Not really a big leap, but maybe that's the reason why we're sitting here. Because normally, again, like high liquidity, I guess on a Friday, sometimes you end up back in high liquidity because it's like a comfort zone. It's sort of like hands off. Like when you take the hands off the steering wheel, where does your car go? You know, it's like the listing price. So it's like it's just going to go towards that high liquidity where lots of people trade comfortably. There's that word again, comfortable. I'm not going to include the previous stuff because we know it's above here. So yeah, we're sitting right above the high liquidity at 448. So if this were like an LSPY situation, it would be because you're like chewing up all of the buyers and you're about to dump through that high liquidity level here. And you can see why that would result in some probable negative stuff. Like at that point, you've got liquidity gaps that could easily be targets on the way down back to 3. So SOS with a backup, I guess. Big freaking SOS. It's a fun chart. Maybe not fun for your account, but it's a fun chart to chart. So I'm thinking about both scenarios. If this is a bottom, how would it maybe break back? And if it's a just an LSPY, it's a pretty high volume one. But if it is, it's like that ascending accumulation with a backup. It might be creating a floor right now at 450 because that is what the push and the pullback are all about. I drew it out really flat earlier, like really short term, because I didn't think if we broke here it was good. And that's true in general, that it's not good. And we've seen why, because then we're just stuck. But on the other hand, you know, there have been times where this kind of push has resulted in upward momentum. A stock fighter is going to come and say, dude, that's just a UT. It's just an upthrust. It's a distribution, and then it just has an upthrust after a distribution. I don't want to be like, yeah. Yeah, you're probably right. But I like the idea that it could be a bottom. So I'm gonna play with it a little bit. Okay. I guess the easiest thing to do would be to consider like, all right, if it's a bottom, which is the current consideration, like, all right, if this is a bottom, how do you confirm exit? Well, typically the exit is going to correlate, just like these guys have those waveform crosses and junk. The exit is going to correlate to a series of spring actions. So this waveform also has a cross in it, just like the bigger one does. This waveform also has a cross in it, just like the bigger one does. It gets very, I would say, silly, because it's like you could just keep going. You can go down to the micro level here and find them as well. And then in the end, you get like the final cat ear, and it is that curtain rod drop. You can see right here, it goes flat and then drops. In theory, we kind of just did this on the macro where we had this big curtain rod effect here that played out in a lot of different stages, and then we dropped really hard and we went along the long-term breakout level. And I was talking about this as well. Like to me, it appears that we made that creek, right, with a January move or whatever, and now we're like coming back to it and we're like checking it out, you know, and we broke it, and that's why it's like this massive move. And you would look at that and be like super bullish, because you'd think, well, then it has to go all the way back up to here and just keep racing. Yeah, I mean, in theory, if it were that, then that's what would happen. But we've talked about this enough, hopefully, that people realize it's not quite what I think we're doing. I think we're doing a like a drawn out kind of version of that, where you're just seeing like an expansion after expansion after expansion. It's more like a gigantic structure. Like this is all playing out on like multiple levels. So you're getting like a gigantic structure. Let's not focus on that right now. That would be like, we are in a really humongous squeeze and we're going to just like rip afterwards. I'm really focusing mostly on this. And I guess this would be a really clear indication of a possible breakout. So that's an easy one. It's just a downtrend. at that point, we're making an assumption that this is finished. But that might be an easy one for us to find. We're assuming that it doesn't have any more upside, where it goes up and then back down again. It might be a good assumption given the fact that we have not that much time left in the day, and this is like 1600 is actually way over here. We have a lot of time left. I take it back. Why did I do that? Why did I draw that like that? Oh my goodness. What the heck, dude? Ugh. Booksy, you idiot. I'm so sorry, everybody. I don't know why I drew it like that. I put this at the completely wrong time. That's the end of the day. We got a lot of time left. I don't know what the heck I was thinking earlier. I must have thought, like, because of options, I was thinking about when options go out. What a bozo thing to do, though. I'm sorry. I drew all my stuff like that was the end of the day. Ugh. Holy cow. Okay, so, like, I measured the head and shoulders. It looks measured out to me. It would seem to me that we would need to drop down first, but I'm not seeing that move just yet. It would be happening basically now or shortly after that we would have a big drop here. So it would indeed be like an LSPY, and then it would drop low in RSI and drop low in price action, potentially. So I'm going to do the fractal thing. Could I see 210-ish mid-late next week? Yeah. I don't think 210 is... I don't think we're going to go that low. I think we're going to go hit the creeks. Like, we have natural backups that don't involve full-on distribution back down here. So in order to hit like 210, in my opinion, unless you break the creek, it would be way out. The backup after a jump over this kind of a move would only lead you back down to like 3. So, and then all my other targets do not suggest that you go significantly below 3. And there's a ton of them. So I did them on this chart. And I know you tend to find really low targets, but the S-curve target here is not sub 276. I think all of them kind of group around $3. I'm not seeing them super low. Honestly, if you go down to like 210, you've broken down. I mean, that's full-on distribution. The fact is, and I think what Stockfather was saying when he said 3 is he's thinking what I'm thinking, which is you're just coming back to a creek test. It's a SOS with a backup, and it's not like what it was per se. And I'm kind of in agreement right now because I'm not seeing an S-curve that's forming like super low. I'm seeing a really high and tight S-curve here. And that's not like what we saw in March. March did have a sell-off that went really low. But the way that thing formed, and I know this is happening really fast, in order for us to have something like that, we would have to be like, there would be another ear somehow, like we'd have a drop and then a whole nother one and then another drop. So it'd be like, this is only like the first part, blah, blah, blah. I'm not really seeing that as very likely right now. I'm going to be on the more bullish side for this one. I don't think a full-on throwback to 3 is bad. I think it's more of like a reset. And then when you get there, you move from there. I don't think it then has to continue. It's a dangerous move to make for obvious reasons. But then on the big picture, you also have a really massive support right where we're at. I think that's why we're camping right now. This is from way back, and it's essentially like a really long-term macro creek. So what I'm seeing is that we broke down beneath it, formed an accumulation, and we've popped way above it, and now we're coming back to it. And that's where I'm kind of like, well, yeah, we might go down there, but I'm wondering if we're marking off right now for liquidity purposes this level. And if we are, that's kind of comforting. It could be a very good sign, you know. The idea that we're going significantly lower, again, would have to be that this is like 1, and then you're going to drop here, and this is like 2, and then you're going to finish. And that's where I think a lot of people are like flipping out about like $1 or something. So I know that we're testing a long-term creek right now at 450. When the week started, I was optimistic we wouldn't come back to 450, but it was one of the first targets that came to mind because we looked at that jump and I was like, well, that's kind of a big one. And I left it on the chart all week. And as it went along, we kind of got these stopping points, and I was like, I don't know, man, if we find support over, and that was the thing, right? It's like, if you find support over 530, you could basically avoid 450, but that didn't happen. We went below it, and we kind of hooked on it. That's the opposite of what I wanted to have happen in order to avoid 450. And then we got down to 450, and now I'm like, well, it's the same deal. It's like, technically, like, this could actually be a support. Technically, like, we're still in a position where we could have a massive reversal on our hands. It's not going that way. It looks like it's really teasing out short volume. You can see the volume's dropping rapidly, but I'm not seeing a lot of buyer pickup either. So for now, it just kind of feels like I'm a little indifferent on it. I don't like the volume profile either way. A lot of you would say, like, well, pullback with lessening volume is good, and it is unless you're in the middle of an S-curve, because then it's the opposite effect. You're actually absorbing buying, and then you end up going back down. It's like a midway point of like stopping and then pushing lower. So, but even there, it's like, okay, so what? It doesn't go, in my opinion, below 276 at this point. And, you know, if the S-curve is wrong and I'm off, it could be a little later. But that's kind of what I'm seeing right now. So I actually think Stockfather's idea of 3 isn't even that bad. I mean, it's the same targets we got. And I think what he's saying is you're coming back to check the creek. You're just coming back to check the breakout. It is a completely, I mean, it's a complete throwback. But at least we go back and fill that gap. That would be nice, you know. There's always crazy amounts of emotion in these kind of giant moves and trades that don't go your way and yada yada. So what I'm trying to do right now is on this short term, I'm trying to see if this drop, what if it's like this guy, but bigger? Have you ever thought about doing deep TA on a Berkshire stock? Yeah. I haven't not done that. I've done a lot of different TA. It's just people ask me to do stuff, I'll do it. This kind of reminds me of this little mini bottom, doesn't it? Looks, you traded the run to 11. Yes, I got into January, it was $10 or $20. I can't remember. I got into January 2025 leaps on May 8th. I got out at $10 when it opened. I still have some leaps that I bought later. They're down right now, as are my put positions, because I also got some puts. They're pretty close to being near my stop at this point, so we'll see what happens Monday. It'll probably be very quickly stopped out Monday, one way or the other. But I made okay money. It wasn't like, you know what I mean? It wasn't like super crazy. This is an interesting idea. I'm not a big fan of expansion of iterations because they don't typically work out, but I have like a curious thought in my mind, and I kind of want to explore it. So I'm going to just really quickly explore it. How would I do that though? How would I look at that? There's just something that piqued my interest all of a sudden, which is, you remember when we dropped down here and we had that little reversal in extended hours? It's kind of eerily similar in terms of the setup, because it came right after that micro cat ear. That's why I'm thinking it might sequentially, it's kind of coming in order. Like this and this are very similar to this and this. They may not seem that way to you at first glance, but to me, I'm like, yeah, I see it, and it's hard for me to avoid stuff like that. So ultimately, I know, it's kind of a stretch. Sometimes this is where you learn new things. This is very flat, but I feel like this is super important. Here. There's a hook action and it goes down a strange like reversal pattern. It just reminds me of that. I know it, you may look at it and say it doesn't, but I've seen enough of these little M shapes and junk to see like there's a couple of them that have these big swoops in the middle, like where they do this thing. And they appear on certain kinds of bottoms that we've seen. And they're weird because they have like a rounded entry here. Sometimes like they'll round into the first one and they'll curve out of the second one. It's what happened right before the June run up. It's almost like a reverse cat ear because you get like a swoopy action instead of like at the end, instead of like the opposite, which you'd expect it to be flat. Why am I thinking of that, though? I don't know. This might be a bit grasping at straws, as they say. That's a fairly evident sine wave reversal. It's pretty simple, easy to see. That's probably why I'm seeing it. So my expectation might be, if this is a larger play of the same trade, which is the case I was making this morning, I definitely said that this morning, it could be that we're seeing a larger swing that's very similar. But where does it start? That's the question. And this is very upward. It could just be a giant elaborate hook. It's going to drop, you know, and that would just suck. I feel like I'm onto something here, but I'm not quite there yet. So here's what I think. I think there's the leap theory. I don't know. I don't know anything about that. I just heard about it yesterday. the idea that a bunch of leaps are expiring and they're going to have to roll them, I don't know if that affects the price that much. We'd have to look back, and I think we did yesterday at where we were, and we were right before that run up. It was like right before the run up. If you go to March 13th, 2021, it's right before the run up that happened. Yeah, so we're definitely lower than we were then. I don't have any other real thoughts on it though. Like, I don't know what's going to happen with that. And usually if people have theories like that, it's because they're really bullish. That's why they like take off. It's usually not a bearish theory for the AMC crowd. So I'm always kind of skeptical. Like, all right, well, maybe, you know. I guess I would say it's this. So I'm trying to like do this in a weird way, but I guess I would say it's like that. Motion. I don't know how to rotate that. I don't really get it. It's not flat. Citadel bought shares on Wednesday. And ever since then we've been coasting, huh? I don't know. I remember Vanguard bought shares after the top in March, and they probably just loaned them out. That could just mean we're going to be back here at some point in the future. It doesn't necessarily mean we're about to run. I'm all for it, guys. I really am. I'm just very skeptical. There's always an example of something that didn't quite work that way, you know? Yeah, so this one actually has a similar kind of vibe to this. It's catching also. Maybe we should just think about it that way. Like, it is the same, but it's not necessarily that I have to find like another angle. It's just this. This is positioned downward though, so that would be more of a negative connotation. Or we're doing a swing around this value. It's sideways and it's widening. That's the only positive I could take from that. So that would be like we're actually in a widening here. And so the next value, I don't even know. It's so weird to think that would be the case. It's not really making any sense. I don't like that. I guess it would be some kind of like equal parts swing almost around some midpoint. Yeah. So basically an equal parts swing around 480. Is this any different than any other target we've gotten, Booksy? No. It's still a 550 target. But, you know, maybe that's a good thing. Actually, it looks almost like that green target too we had earlier. It's really close. The very first one, not the one I drew today. That was closer to like 550. So yeah. You still have to get through this cross section though. It's an ugly cross. And but I guess if we did it, we could probably see 550. I think it's kind of just a reactive move up, like an S-curve kind of deal. It's a little strange because I feel like we are doing that, but it might I might be being overly generous and saying that it's wrapping around this value and not some kind of like a downward wave, which seems also possible. So it'd have to be like a shift from like that downward wave to the upward one. So it can't be, it's a change of character again. It has to be that. It can't be like assumed. It's not assumed. It's not an assumed move here. It's an implied move if you change direction there. Yeah, this is where things get a little weird with the waveform stuff that I do. You guys are like a little weird. Yeah, a little weird. Can't hide paperwork. 1 2 1 3 1 3 2. That's weird. Why does he have that number? What the heck does that mean? It's like some kind of binary code. It's not binary if it has a 3 in it, Booksy. Sorry. Who knows? Some kind of code. Imperial probe droid. I didn't hit it that hard. Must have had a self-destruct. Imperial probe droid. Begin preparation for evacuation. They know we're here. I think they'll push it down to 3 next week. Yeah. Well, I'm just saying, like, remember when they buy shares, they can loan them out, so it can add to immense amounts of selling pressure. I'm going to have to do some more work on this today because I'm really liking where I'm going with it, but I don't feel like I'm going to finish. I think that, as silly as it may sound, I think we might be in a little bit of a competition of rotation. One of them is certainly downward. It's kind of obvious. You can just look at the channel, and it's in a channel down, and then you're like, okay, whatever. It's just a channel down, Booksy. Yeah, that's the nature of waveform, is that you're gonna have, and especially in the middle of a possible S curve, you're gonna have some kind of channeling motion, right? And of course, if you don't break that channeling motion, you're not going anywhere. This right here is one of those ways that help you determine where you're gonna see the next top in a channel. So if you've ever done that, if you've never done that, you can do it, and you'll see that a lot of times it shows you not top, but it shows you where if you do go up, you might come back down. It's the creek check. It's oddly very, very effective in channels for pinpointing new targets in that channel. So it crossed here and then came back down. I think it's just sine wave theory. I don't think it's that odd. I said oddly, but I don't know why I said that. It's just sine wave stuff. We've talked about that sine wave. I've done that diagram like dozens of times. You guys have seen it, where like it points to the next bottom. So in theory, like this has already hit the next top. You can see it already kind of went up and pinpointed. It hit right on that intersection between those major trends. So at this point, it's either a low spring-like accumulation where it's going to hit some kind of a low, maybe around 430 or something, and then pop back up. Today's a long day. A lot more could happen today. But the big prices to beat are the same. Like, we haven't really had a lot of changes here in the last couple of weeks. I think we talked about 5, really it was more like 495 yesterday, and we talked about 530 like pretty religiously. Those are still the levels, thankfully, I guess. They really haven't changed very much. So if you're in the position of like, where do I enter if you think it's going to turn here, if it's a shallow S curve, could it turn here? Is it even possible? I think it's possible. I think that the breakdown here is ugly, and ultimately we could get back up to 5 and not break out. So like, even if this came back up, there's still like a lot to prove, you know. Earlier we were talking about it needed to cross when we were thinking it could be an ascending accumulation. Is that possible? Still on the table? Well, you guys can be the judge of that. It never really broke the creek. It kind of pressed down against it and then it walked away from it, and it didn't really push through it. So we were looking at that creek pull when it pulled back to like 445. We were waiting to see if it would break. It wicked through it twice and then just sat there. And I just figured, whatever, it's probably just going to chew up the fat till the end of the day and be done. But I mean, from a technical standpoint, it's an implied weakness, but it didn't break it. So I don't know what to make of it yet. There's no answer there. I do think that this is a peculiar creek coming down. It's kind of created this like shoulder structure on the right side. It's an interesting one, and I wonder if we busted it out by the end of the day, if that could be a sign of possible strength, or if it's just a sign of another ear formation, you know, which a lot of people will see, the point and then the second one. I think we'll probably get some kind of move up towards 480 end of day, and then I think we'll probably come back down. The reverse is actually better here. I think the reverse is a lot stronger, in my opinion, which is if we were to come down first, I actually would see that as a positive, because I can see this not necessarily mirroring outward, but essentially like starting a climb back up. And that to me would be a lot more positive way to end the day than up first. So I'm not saying either has to be great. It really, both of them could play into accumulative setups or distributive setups. It just depends on how they finish, especially the ear one. That one is always a bit tricky. But the point I was making is that earlier I said it would have to come back up and do this. And we found that was like also like the 30-minute moving average, which is about to get a crossover. It's like narrowing down. And so I think a lot of what we're seeing today is like that's going to be pinching together. And ultimately, like that price level didn't really change. Like it doesn't matter when that happens. If it happens, it has to happen like in order to advance. So in some ways, like nothing has changed today. Just like every other day, it's like it's still the same levels to break. This is definitely a wall going into Friday. You can see like just the repeated attempts to push back above that 5 level have kind of failed for at least 48 hours here. I mean, it looks like quite a bit of time. I do see this as a possible rising structure that could still play out on a bull side. I'm going to be positive about it going into the end of the day. I know there's negative possibilities, and y'all, people are going to misquote me left and right. I don't really care. They're going to call me wishy-washy. I don't really care. Like those bear targets were there from early on. We are where we are. We're going to see how it plays out. I've attested to the fact that I think you should just take it level by level at this point, because during like these kind of massive squeeze motions, you can't read minds. You know, you can do your best to analyze it, and that's as good as you're going to get. So in the event we get a drawback down, my expectation is that you would come back down to 428. And 428 would not be bad. So if we end up back low today, I would not be panicky. I would think that is an opportunity, because we're probably going to finish at 450. So it's a short-term trade. But also it could be that that's essentially creating a lower spring-like bottom, right, before a continuation upward. And if it doesn't break the head and shoulder structure, it's really actually quite positive. So that could be a really good sign of strength. So for now, I don't know if we're going to get this jump. I'm not really sure we will. It kind of looks like it's trying to pin it right there. You can see the waveforms are getting kind of stuck. I might expect it to take a big drop here or a big run up here either way. In the event of a run up, I'm not as comfortable saying that that's bullish, but I'd have to see it play out. So I'd have to report back on that later. I don't want to overstep right there. It's possible it could be bullish, but it reminds me a lot of the final end of a sequence. And the last time something reminded me a lot of the final end of a sequence, we ran 300%. So it's either going to be really good or it's going to be really bad, I think. And so far we've had a really bad. Like, it's not been in our benefit. Every time we've kind of come to these pinch points over the last week, ever since the first run up, right? It's been fairly negative. So Wednesday, Thursday, both had some pretty significant moments, and they kind of let us down, to be frank. I mean, I know that nobody owes us anything in the market, but those setups didn't pan, and then we never got confirmation of anything. So I'm looking at this like, okay, I would even say at this point, just based on this other, I know seems like an inconsequential trend right here, but I would say at this point, like coming above 485 would be a really big deal. 485 with support is one of those levels that I'd be like, oh, that's interesting. You know, I think that's a really important level to hold support on. Everything else downward is just based on this concept of this is just a hook with an LSPY. That's going to be like the main. That's going to be kind of like the main focus for a lot of folks, is they're going to say like this range finished weak or something, and then it's just a hook here. And frankly, they're not completely wrong. I do think it hooked on the major uptrend, and I do think this looks like it could be an LSPY. I think this structure is very reminiscent, though, of a reversal pattern we've seen. But it's not done yet, you know. So please don't just be like, oh, it's finished. No, it's not. It has to do some other things. And I've never really looked at that patterning on the master fractal as an ascending accumulation with like an extended tail. But now I'm starting to see that. I can't unsee it. I don't know why I never saw that before. But now I've seen it, so that's what I'm suggesting, is that not that it has to go this way, because sometimes it will break down. If this is a cat ear that's destructive, you can see that normally that would hook here and drop. But if it doesn't hook and it goes the other way and we get the confirmation, I think we're in for a big run. So anyways, we've already got that move. So if that's the end of it, that's the end of it. We'll find out very soon. But yeah, I think coming up to 45 with support would be a really big deal. And it would be a breakout of this. And that to me would be highly probable that this was a shallow S-curve, which is just an S-curve that doesn't go beyond really right where the curve starts. Does that make sense? So fingers crossed today, man. I really do hope the best for us with this curve. I know that those low targets are there. I get it. I'm not ignorant of that. I get that they're there. They're still there. They haven't gone anywhere. They're still there. But in the event that this is some kind of a bottoming structure, then you might see that this becomes a shallow S-curve, and we would get a reversal at least back up to, I think we would come back up to at least 6. There's no guarantees after that. You'd have to then watch for a distributive top, but we would definitely come up to 6 if it's a shallow, about 6 if it's a shallow reversal. That would be great, because a lot of people I know would be able to take that opportunity to change their positions out. It's coming to a kind of a tightening point here, but there's still several hours left in the day. So you know, I mentioned earlier, like, I really would not mind. This head and shoulder has already kind of gone way past timing wise. It's just, there's no volume, so I think we're just delaying it. But I really wouldn't mind it coming back down right now and hitting this bottom. That could be really positive for us. So if you're feeling like that's a bad thing, let me just tell you, like, sometimes you go down before you go up, you know. It's not always crystal clear. you got to like think outside the box in those regards. So yeah, and this actually looks like it, because it's so wide, it looks like it's setting up. It's setting up right there. It's a weird marker. I don't know if I'd want it to go down to 415 though. It could just be an indication that we're going to drop later in the day though. What time is that at? Yeah, that might make some sense. Yeah, I would not say this is likely going to break up. This is likely going to break down. So just in case you're wondering what my immediate thoughts are on that, I think this is more likely going to break down than up. Again, this looks a little more like a flag with this head and shoulder action. But then after that, I mean, if it broke up, whatever. I'm wrong a lot. But this is, after that's really where it matters, because I think a breakdown here, I'm seeing it now. Now you can see the double M shape. Jeez Louise is long. They stretched it out today. Now I can see that. So that ignoring the bottom there, you can kind of start seeing those patterns like play out. It's almost like a triple top. What a goofy thing, huh? This is the low one. There's always a low one. It's always like in the middle. It's always like this guy between the other two. This guy between the other two. This guy between the other two. There's always like a low dip. So goofy. So the low dip is the one you want to pay attention to, because it usually indicates where the main creek is. So like that's where the main jump was, and then this is giving you an idea of like direction potentially in the future. So from here, you can see that drop is fairly succinct. If it went straight there. We may not get that kind of volatility today. We'll see. Anyways, question says Gadriel von Orion. How many times were you able to predict a run-up in the last, say, 2 to 3 days on this? Why are you asking me that? What's the goal? I did it this morning. I mean, you can rewind the stream to this morning. I said I thought we were going to go up to here. And then all of my scenarios were like up to here and then probably sideways. I can't predict runs in after hours trading. That's not been possible. This one, I said if we got over this trend, we might run, but we didn't. So there's no way I could have validated that. I mean, pretty much everything else has been distributive, though. I'm not sure what you mean by predict runs. I feel like I'm very in sync right now with AMC on the whole. I think what happens on one level needs to stay on that level. So if I'm talking about the last 2 to 3 days aren't super typical, but they're also just cat ears, and that's what we were expecting. So like what stays on a level what I mean by that is like if we're talking about micro runs and movements, those things don't have as great of an impact ultimately. I mean, they start things off. They can ultimately be like a snowball, like that you're starting to push and then it grows and grows and grows. But like the targets we picked out beginning of the week are the targets that were correct. I guess I'm confused as to what we're missing here. The last 2 to 3 days, the big run up was the only main thing I predicted might happen, and it didn't happen the way I thought it would. It was way faster, but it hit the targets. So I really can't complain. The rest of it's just been downside. It's been retracement. And the first thing I said is we had a 100% gap. Like everybody at that point, you would expect there to be some kind of retracement. And then I said we don't want it to hook beneath 530, so we'll see what happens when it gets down there. And then we hooked beneath 530 and we got here. So I guess I don't really know what do we mean by predicting things. Like, I feel like I've been pretty in sync with it, but the micro stuff is different. That's why first of all, I don't usually stream that often. I'm usually only streaming a couple times a week. I've been streaming like every day this week for hours. And it is hard because you end up overdoing it, overthinking it maybe, like you're saying. But mostly because you're sitting here on like the 1 minute chart. So every little thing feels like this huge move, but it's not that huge of a move. And in the end, what we're seeing is, I've been very clear, it's like, this is either this or this. It's either a S-curve, this is what I wrote this morning, is like, I don't know where the heck I put it. Did I delete it? Why would I delete it? I don't know why I would delete it. I don't know what's going on here. Anyways, yeah, this is what I wrote this morning, is like, it's either a shallow S-curve or it's a full S-curve, and the full S-curve has a grouping around 3. So if it's a full S-curve, I'll see you guys around 3. Don't come back and tell me that I didn't say that was a possibility. You know what I mean? Like, as soon as we ran up, I talked about March. I just did this like on stream a couple hours ago. Somebody else was asking about, or don't you think you're just, overdoing it, or you're not right, or TA's, whack, or I don't know what you guys expect. Like, as soon as we ran up, I said, hey, there's situations like that happen in March where you get like a giant upthrust. You don't want to bleed beneath 50% and then fail to make a bottom. It will result in a big sell-off that will go down low. That's what happened. I don't know what else to tell you. Like, that's it. So have I been day to day, like, kind of wrong about little things on the micro? Yeah, I'll give you that. You probably go back and look at the stream and pick out like 2 or 3 times where I said, I think it might happen, or my gut feeling was it was up, and it didn't happen. But I've been very careful to provide you guys with good levels for support and resistance. I gave you the price target on this head and shoulder. This was back on Wednesday, only 2 days ago. It feels like a long time ago. I said, if this head and shoulder price target works out, we're going to hit 427. Well, hot dang, look at where we are. You know what I mean? Like, we hit 427. How is that possible? Brooksy just got lucky. No, that's not even my methodology. I used Bulkowski. So I didn't even that wasn't me. That was just me using someone else's methodology that's been developed and tested over years. That's just technical analysis. Like, that was the head and shoulder target. Why did that's the only reason I marked 427 on my chart. You can go back and watch Wednesday's stream. I did the head and shoulder target, 427. That's where it hit this morning. So 1 minute chart is just such a bad way to watch a stock. But when you're live streaming all day, sometimes it's okay, I think, to get into the nitty gritty. But I think the problem with the 1 minute is that, you can see a motion and you might think it's a bigger picture motion. And that's what happened yesterday. And I'm pretty honest with you guys, like, I screwed the pooch on that, because I even posted it in my little update. I said, well, I think it looks okay because it came back up. I thought that was the end of that cat here. I thought this was a 1-2. I thought that was it. But it's because justification, that's what someone else was saying, is like, there's always an answer as to why it didn't work out. Well, this time it was just human error. Like, that's my justification. So that's not really a justification. It's just I made a mistake. I misjudged it. the justification is that this is how we end those sequences with the double top cat ear kind of thing, and that's what I thought we were doing here on this micro, and it really was a lot larger, and I didn't realize that. So yeah, so I mean, like, that's one big error. We went green today, so if if you made an error in judgment on like that and we went green today, it doesn't mean you're going to get out necessarily even, but we were green for like several hours today. There's no reason why anybody couldn't have easily like been like, okay, well, I'm out, you know? So in this particular case, my error wasn't like so bad that people would have lost a bunch of money or something. Not that you should trade on what I say anyways, but I don't think there's anything wrong with exploring possibilities when we come to these like micro ranges. Like, I think it's a very strong chance that we can see this bleed down before end of day and go back to that 427 area. I think it's a strong probability. It doesn't mean it's going to happen, but I think it's a strong probability. There's also a possibility that we need to go back up and test another higher resistance instead of going low. I don't like that as much for us because I would rather see us test low than go high, because I just like the idea of downward movement as a means of buy up. You know, I want to see if there's another buy up here as opposed to up thrusts, which are usually more negative. So I don't know. Okay, I guess I'm kind of like, that's why I said where are you coming from, because I don't think you're trolling or anything, but I think what you're saying is you feel like the movement has been kind of hard to read, and I agree, but it's mostly because we're just sticking our heads in the 1 minute chart here or whatever, and that's difficult. So yeah, I mean, I'm on the 6 minute, and it's a lot more reliable than the 1 minute. And if you go to like the 15, it's probably more reliable than the 6 minute, you know. Short-term trading, like, I usually only trade on 6 and 15. I don't usually trade on 1 or 3. I almost never do that. If I'm short-term trading, again, this is like swing trading, I'm usually only on 6 and 15. If I'm longer-term trading, I'm probably going to work on 30 to 30 minutes, maybe 2 hours, just to get an idea of what's going on short term. And then I'm going to work mostly on the 4 hour. So that's typically how I see it. It's like you're kind of stair stepping up. But yeah, I mean, I don't know. I feel like all the targets that have been hit have been pretty predictable targets. Some of them didn't hit the way I thought they would. This target did hit, but just hit in a weird way, you know. This target ended up being a reversal target, and I said that was a possibility. Like, sometimes these diamond targets break down, you know. Like, they don't always break out. Sometimes they go down, and there it is. Like, there's your down target right there. So I mean, it's all been pretty evident. I've been trying to read with 3 to 5 10-minute charts to see how it could move, but I didn't really respect most. Right. Well, that is a good commentary. So you've got a point. And I was saying that a little bit earlier on the stream. Like, it's hard to read right now because it's not really respecting even numbers. Like, it's going to weird spots. And that's where I would say sometimes it's not about those like even integers. It might just be about where the bid and the ask are. And I'm not looking at that information. But yeah, it's been doing weird stuff. I would just say, like, go back and look at the wicks from back here, because like this was at 483. That's a strange number. It is a strange number. This one's at 427, which just happened to be that head and shoulder number, you know, like, of course it was, right? Because they were targeting that. I mean, sometimes there's oddities in that. Some of it's Fibonacci levels, which just don't always look very nice. yeah. So, all right, we are getting a downward motion. So speaking of that downward motion, looking for that today. I'm kind of glad that we're getting it. It could present itself more as a bottom as a result. So this target, these two targets up here, they're not going to be met on the basis of the wedge. There is no wedge. It developed into an S-curve. Like, that's the way I see it. I don't look at it as a wedge anymore. So these were wedge targets. And if you leave the wedge and there's no breakout, then it's probably not a wedge. I don't know what it was, why it was. Maybe it was a way of deceiving retail. I don't know. But if you don't get the breakout, you don't get the breakout, and it transformed into something else. Okay, it's done. You know, and AMC does that sometimes. It does weird stuff. There's a lot of times where we get like a falling wedge and it turns into an S curve, or we get a rising wedge and it turns into an S curve. It happens quite a bit on AMC. And it's one of those oddities that once you kind of see it happen once, you're like, all right, I guess it could happen. They like to deceive people with, same thing with those cat ears. They look a lot like wedges. And sometimes they'll try to get you into a trade at a top with a cat ear type deal. And it's really like a wedge. I haven't seen a lot of that lately. Most of them have been almost all downward or whatever, but they used to do that all the time. They used to have every top look like a friggin' pennant, and none of those will work out. If he knows what's good for him, he won't talk. He'll just let it go. If he knows what's good for him. Sounds like a threat, Booksy. I mean, like, if he respects his shareholders, he'll just not blab about it. In reality, like, this week we're up, week over week we're up. It is disappointing to run 300% and give up a lot of it. That's a tough pill to swallow, but it's okay. I mean, really, a retracement down to 3 could be a trend check, creek check, however you want to put it. I think finding support at 445 might be necessary in order to kind of pump back up and maybe even just to redistribute. This is going on for a real long time. And then we talked about earlier, how is it invalidated? Well, the cat ear decision is done. Like, we broke down here and it created a hook, right? So unless this is a bottom that reverses that decision, then it's going to continue down. Does that make sense? And I already kind of talked about what a reversal would look like. It would be up here. It doesn't have to be today. It could be Monday. Probably won't be today, right? But it would be like a reversal back to the upside. I think that's a possibility, and I think it's possible that if that happens, we could just be in for like a longer distribution. It may not be what people think it's going to be, you know, because it might seem like it's going to be an accumulation. But like, if we go back up and start doing up thrusts up here around like 650 to 7, it could just be that we're pumping up in order to redistribute and then drop again. You know, we've seen that. Remember what happened in the August run up? That's my example for that. If you go look at the August run up, that's a really good example of like, it does have a reactive move, but it ultimately was about redistributing. So seeing that wide cat face made me laugh. Yeah, and in the importance of like taking profit, like, don't wait for it to, I'm not waiting for it to retrace 50% before I take profit, you know, if I can avoid it. This is a little different because you can see on this one, when it broke down, it had already like hooked. But this is an example of like a shallow S-curve. It went on and on and on and on and on. And it looked like it could have, you know, finally just broken down on, and frankly, like ultimately it did go there, you know, it did go to like the full 100%. But it never happened. It reversed and then it hooked here and it redistributed. And I don't know if that's in the cards for us necessarily. This is a different time. There's a head and shoulder. There's all kinds of stuff. And of course, Ape was around. So liquidity was all bonkers too. But could we see something like that with AMC right here? Maybe. You know, the example would kind of fall apart, but if we did it like this, you might say, oh, it looks pretty similar, you know. And I'm sure there's an angle here that you could probably grab. That looks pretty similar to what we're experiencing with like the fall through and a potential hook on a cat ear, and then it drives low and then it rocks back up. And it kind of could create the situation where you get like a distributive top up here just to kind of redistribute. And in the end, it looks like a giant like cat ear structure kind of deal that's falling down, so on and so forth. I think that's a possibility too. And I really haven't talked a bunch about that, but I feel like that's a decent possibility as well. I'd be curious to see where that 1 hour is, or not the 1 hour, but where the daily is after this week. We'll see how low it came. Because if it's down here at like 7 or something ridiculous, I could see that. Let's check it out. Can't do daily with extended hours on here, but yeah, that wouldn't surprise me is what I'm trying to say. Hang on. It's pretty high up. It's way up here, so hard to say that we would get all the way up to like, it's a lot lower than it was. It was at like 1066 when we first came up. I think we're probably down to like 1030 by now. But sure. I guess it could still be a wedge. I don't know, weird shaped wedge. I don't think it is, but anyways, yeah. But that's a possibility as well. I mean, we're all thinking that if it went back up, it would be like June or something, where you'd get this amazing move and then it would just reaccumulate high. But it could be like March, where this is like a way to drag out price action for a week. And then all of a sudden you're dropping again, you know? And it's like, well, what happened to the S-curve? And it's not there anymore, and yada, yada, yada. And then it's actually not about that. It's about a giant like cat ear kind of thing. And then we come down, you know, back down to retest the creek. I'm just giving you guys a broad view if I can, because I know for me personally, like if I saw something like that, I'd be really nervous, and I would not hold after something like that on AMC, because we've had times where it looks like it might recover. It's really just a massive like hooking action, you know, on a particular target. Totally possible. And that could happen even lower, to be frank. I mean, that could happen down here at like 270 and come back up to 5 and then drop again. I don't want that to happen. I'm just saying, like, you have to keep in mind, like, those distributions could be popping up anywhere. This is one that had that S-curve. It looked like it could continue. I remember targets left and right, and it eventually got there. Absolutely. But it wasn't along the original trend. You know, this was a very drawn out process, and you can flatten it if you want to make it look more like it. Yes, different in how the setup sets up, very different. So not one-to-one by any means. It's not. But definitely not out of the realm of possibility either. So I think that's kind of the point I'm trying to make, is that even here, like a reversal back up could just be met by a new distribution. Like if sellers are too weak to bring it down, they might just bring it back up to like 7 in order to redistribute, to try to take it down again. So it's over? Well, the day's not over. I'm saying that there's a possibility for a lot of things here. Like the main scenario that people want, which is the scenario I was kind of originally imagining, which has more to do with, would have been us like staying up here basically, like right there, and pushing up probably, right? And then coming back up to the top and forming a reaccumulation pretty high up here, that then results in like a breakout. Is that out of the realm of possibility? No, it's not, but there's a clear desire to drag this back down, and it would be silly to ignore that. So if they're trying to drive the price back down to like 3, which was pretty evident early on with those early wedge kind of shapes, they were driving the price towards 3, then you have to then step back and say, okay, well, how could they get there? There's a couple ways. One would be to just continue the S-curve that they've kind of built out here, this kind of downward motion. You can call it an S-curve, you can view it more like a trend or find a trajectory you like, but just kind of follow that same motion down, where this is like a halfway point basically, and then they're going to drive the rest of the way. But in the event that they don't have the power, or they just need to go back and make some checks, they might take it back up first. That's what I'm trying to get kind of that there's always like another possibility, right? It's never just up is always good. Sometimes up is not good. And it's not always down is bad either. Sometimes down is good. Like we might have this go back down to 3 and it's a full-on reset or spring-like action, you know, and then you could end up recovering over time. It could be even bigger than that, you know. That's why I'm stressing, you don't have to follow me. Follow whoever you want to follow, but try to remember that this is like a step-by-step process, and you need to make sure that you're aware that the changes might be rapid and sudden, and that you shouldn't take for granted anything on these kind of big moves. I'm not lecturing you. I'm not your parent. I'm just saying, like, don't assume, you know, what most people are assuming about every little thing. Like, if you had assumed that it's going to just bounce and continue here, you would have lost a lot of money, right? Or assume that it's going to open and keep ripping, you know? So you got to be careful. That's why, even though it's annoying to people to hear me go back and forth, that's why I don't assume that every down motion is a bad motion. Like, sometimes it is and sometimes it isn't, you know. This might end up being fine. It's kind of hitting near where we thought it might here. And I said if it went lower, it'd be like down here. That's a massive sell-off, and it's not going very far. It only went down to 440. I think the goal here is to pin it, and that's kind of it. So today was pretty easy. Like, it just seemed like a straightforward max pain day based on where we were. And the pre-market action, not the after-hours action, but the pre-market action was very determining. And pretty much gave us the go-ahead that, yeah, unless the market maker gets screwed and there's a whole bunch of hedging that happens, you're probably going to end up with a bit of a bearish move today, a flat day. There's still a decent amount of calls that are probably in the money from last week. There's the whole leap theory thing. Nothing else here really makes me feel like there was anything really bad today. It just kind of, and I'm saying is I think this could be a potential bottom. It just has to do certain things, you know, like it needs to make a higher low. I think that would be ideal. I don't say needs to. I think it would be ideal if it made a higher low here and then jumped this creek, going back up. Found some support above 460, then found support above 485. Those are kind of my big markers right now. Yeah, I would say, yeah, like 460. So. Yeah, I hear you. Well, sometimes, yeah, you get on the wrong side of it and there's nowhere you can go. Like I said, I would be mindful that there's always a possibility that this is not, that they don't have enough selling power to just keep driving the price down. Today's price action should be thought of as a setup for something. So I'm going to look at it that way. It's a setup for something, right? And I think it's a possibility that this thing could easily be headed back towards at least 5. From here, you're going to see it reject or whatever. I think it's a possibility. I think it's just a decent possibility because of the way this is setting up. Does it also look like a hook? Yeah, kind of. But the rest of the structure here is very clearly, in my mind, it's designed to confuse because it's going to look like a head and shoulder. But we've seen it before on AMC quite a bit in these kind of actions. And it's not always what it seems, So I'm watching it carefully because I think that it's one of those like disguised emotions that has a tendency to be secretly bullish if it does the right thing. It has to do the right thing. It has to make the right moves. But look at the way it's setting up, like right around this 50% mark. Even if it drops low, if you can find that support at 50% and not continue this downtrend, that's a signal. That's a bullish signal. If bulls can manage to keep this thing from continuing its downtrend, there's no hope that the S-curve is going to finish. It's kind of, you can even treat it just like a trend here. It's really kind of nice because you can see hey, if you can't make a new low here and it ends up going up, this is what we're talking about, then it's just a trend breakout. Then you have to contend with this upward motion of the hook. And that sort of makes it simple. But that's what I'm saying. I'm reading into this a little bit. I get it. It's a little bit annoying that I'm doing that, but it's a possible trend reversal. So that's why I'm saying what I'm saying. I'm also saying don't sit there and think that it's already done it. It hasn't. It's possible. Please. Please. Gotta listen. I don't like when people come back and try to tell me I said it was reversing and it wasn't reversing. Yeah, well, it has to hold these levels and make certain moves. And it could be very fast. I genuinely think if we make the right moves here, if this happens on Monday, we'll probably head back up at least to this 530, 550 area. I don't know why else we would do that unless we were going to go back up to here again. So, because this is like all this motion is, if you kind of look at it big picture, all this motion has been, we found support around this 480 and then we've just kind of been pressing down beneath that support. So if it were to reverse here, then you would have to assume that we probably would come back up to here like pretty rapidly. You get a pretty rapid move back up to this like 580 level because that's the top of that range. So if we were to break here and go up to where I said we would go up to, if those are confirmed, I don't think you stop at 5. I think you probably could just see it go right back up to again, near 6. It's sort of where it would go. There's also like this weird like outer trend here. I left it really gray today, but it's like right there. That could play a part in it. It's a strange intersection right here of like a bunch of different things going into Monday. I could play a part in that cross. It looks like right where I put it, but it's not, that wasn't on purpose. It just could play a part in that jump. There's nothing really else to look at today other than what I was talking about with GME, like a larger structure potentially. GME still looks like, it's just generating kind of a hook here. Hard to say. Not really seeing much on the RSI to give me an indication it's going to turn just yet. It's close, but not quite there. Yeah, I don't know. It's either shallow S curve or it's not. It's super simple. So simple. And we already know it's going to be at 450 or something the end of the day today. So we're just going to have to wait till Monday. And I do think that come Monday, we might see it, one way or another, it's going to make a decision. So we'll see that maybe the shares that were bought back here, the intended purpose of that was to, give them back. We don't know. We can't make that call, but a lot of trading happened beneath 426. So that's where a lot of this volume was early on. So you have to be mindful of that. Yeah. But I don't know. To me, like going back up doesn't mean it's over. I just see it as like a possible way of like distributing again. And that's why it would be a little dangerous to try to trade out of that motion, because it could just be like a secondary distribution action, which is kind of common. That could happen lower, like way lower, like way down here. But let's see, just take it level to level. Volume is dropping with price on GME. Yeah. Today it's definitely been, big volume then just drop. But that's pretty normal for Friday price action. Kind of staying in line with what we see on Max Payne. So. Thanks, Lisa. No, you can't quit. You just keep going. You gotta make mistakes. You just gotta keep going. All right. With that, I'm gonna quit. No, I'm gonna head out for the day. I'll be back on Monday to stream. I will try to do a video recap tonight. I always say that and then I don't do one, but I can usually get one done over the weekend. So maybe it's not tonight, maybe it's by Sunday, but the weekend I have a lot more time, so it's easier to fit it in. Probably gonna be 450 in a day or something like that, just under that. So watch for that today. I wouldn't make a whole lot of noise about where it ends up today. Week over week, we're still like up pretty significantly. So you look at where we were last Monday or last Friday, we were way back here at like 297. I mean, we were super low. So the whole week has been kind of rough, but we're still up like quite a bit, on the weekly. So a 50% move. So like there's going to be a lot of options that ran into the money regardless. We'll see what happens with that. So I just wouldn't put too much on emphasis on those kinds of things just yet. I don't know anything about the leap theory, so I'm not going to talk about that. And, GME, it's had a rough go. It had some dilution news that really drove this price down. It's a lot more obvious on GME. You can tell this looks like that flat top cat ear business. It's weird, isn't it? Because like AMC has the same thing, but it didn't make that kind of move. So it's hard to know. And honestly, I feel worse for GME people right now than AMC. This has given up a lot. Like this move was more gradual, and I feel like it moved from like 18, and it's only at 20 now. So this has been a rough week for GME. Just tough, But anyways, I'll try to catch up with y'all later. Hope you have a good day. And yeah, be well.